in different fields of the technologies. So I feel that it is apt that we are having this entrepreneurship conclave, which not only has talks, but also tries to have some sort of a case studies or a competition which will be sort of conducted. So I congratulate the student coordination team for organizing this particular thing. And also the talks also in the area of the stock market is some sort of a very important thing which will come to know how the at least the stock trends are known, and what are the technologies, what are the services, what type of industries are having this particular growth in the current scenario. So I think this is a very important thing, and I would also like to welcome all the participants for this. My only thing is you actively participate in this events which are being conducted. This is for you. So you should take the best benefit out of this particular activities. So I would like to thank on behalf of the Bangalore section and the student coordination team for attending this particular conclave. Thank you. Thanks for the organizing committee for giving this opportunity to sort of welcome the participants. Thank you.
Thank you, sir, for enlightening us about the importance of entrepreneurship in today's world. Next, I'd like to invite Chengappa sir, SAC co-chair, IEEE Bangalore section, to speak a few words.
Well, thank you, Tejasvi. And again, with respect to, I would like to start by saying congratulations to all the organizing committee and IEEE Bangalore section students coordination team for having this conclave. And finance being one of the key ingredients for a successful startup, right? So many entrepreneurship, however, lack the knowledge of finance. And I firmly believe that the student conclave would help in disseminating financial knowledge needed in starting and operating the startups to our budding student community who have joined here, and who predominantly who are not from a major in finance, right? So at the end of this conclave, I hope that the students would make best use of the sessions and would understand financial statements, probably income statements, the cash flow statements, best practices needed for simple financial planning for a startup, concept of company valuation, if people speakers would touch upon that, and also one of the main ingredients being how startups get funded. To summarize, I again wish and hope that this conclave enables all our student community to be entrepreneurs, and also those planning would-be entrepreneurs to understand the language of finance so that they can fulfill their startup dream with more confidence. With this, I would hand over the virtual podium back to Tejas. Thank you.
Thank you, sir. Like you said, finance is really important, and I'm pretty sure today's conclave will be really useful for all the participants. Before we move on, I request all the participants to turn on their cameras for a virtual group picture. Thank you, everyone. Now, I'd like to hand over the session to Varsha to begin our first event for the day, a talk on algorithmic trading and investments.
Thank you, Tejasvi. A very good afternoon to one and all. I, Varsha NJ, volunteer for Bangalore section SCT and subsection representative for Mysore, will be moderating today's discussion on algo trading and investment. Finance is an important aspect of entrepreneurship, and when it comes to finances, it is difficult to look past the stock markets and trading. Today, we have with us Mr. Narasimha Murthy, ex-director of Product and Operations, Deep Value Technologies. He has over 14 years of experience in managing algorithmic trading systems and has handled US cash equities and global cryptocurrency markets. He led the operations team that monitored low latent, high frequency algorithms, which traded over 60 billion shares and managed buy side algorithms for prop funds. His expertise is in dark pools, fixed certification, and order types. We are also joined by Mr. Bharni M., architect, ex-lead technologist, Deep Value Technologies. He's an architect and technologies with over a decade of experience in developing and testing distributed systems. He's experienced in building highly scalable, message brokered, microservices-based asynchronous software systems. His expertise is in building high availability, low latency cryptocurrency ecosystem applications, including trading strategy. He has also built machine learning-based predictive models. They will be enlightening us about algorithmic trading and investments. We welcome you, sir. Over to Mr. Narasimha Murthy.
Hello everyone. Sorry for the delay here. I think the speaker is facing a few issues with network. He'll be joining us very soon.
Hello all participants. This is Sujata, SAC Chair of IEEE Bangalore section. Thanks for supporting this fantastic event from SCT team. Very happy to see a lot of enthusiasm from each one of you. I wish you a very, very happy learning. And my objective is we will have to support a lot of initiatives of Government of India in terms of Atmanirbhar Bharat, Make in India, and startup initiatives taken by our Honorable Prime Minister. And this is an opportunity for you not only to work as employees to big organization, but also to start a lot of enterprises where you will be providing job opportunities for a lot of your fellow Indians too. So wishing you all the best and hope to see few entrepreneurs spring up from this event. Thank you.
Hi, this is Narasimha Murthy here.
Welcome,
Hello,
sir.
Welcome, sir.
Thank you so much. I hope I'm not late.
No, sir. We are happy to have you. Thanks for agreeing to be a part of this event, sir. Thank you.
No problem. It's my pleasure.
So do let us know if you have to share your screen, then we can give you the access so you can present your screen to the participants.
Sure, I'll let you know if we had to share the screen, but mostly it'll be like more of a discussions, right? Like, so
All
I'll
right.
let you know. Also, it's video mandatory, or can I have the video turned off, or
Whichever is more comfortable for you, sir. Either way works.
We can get started, so over to you.
all right, I'll just give like a couple of more minutes for my co-panelist like to come in, like, Bharani. So I'll just get started off like as soon as he comes in. He should be in like any moment. Right. I think I'm sorry. I think he's taking a little time, but like, when he joins, I think we'll continue with him. But like, I can get started off. First of all, am I audible and like all good, like in terms of voice and clarity?
Yes, sir.
Yes,
All
sir.
right. Thank you for the confirmation. All right. So I think the Varsha would have told you about like, my background and so on. So I'm Narasimha Murthy, but I go by Murthy. And before I start off with, right, I'd like to thank IEEE for giving us an opportunity to speak in this subject. First of all, algorithmic trading, right? It's very close to my heart, and as well as to Bharani, who is going to join in some time, right? Like, we've been in this industry for 14, 15 years. So yeah, thank you for giving us opportunity to speak in this particular subject. And also for Varsha for like, especially for coordinating with us to get this going. And before I start off, right, like, Barney is going to join, and like he was with me in Deep Value, right? Like, both of us were there for quite a long stint, right? Like, for I was there for 13 years, and he was there for like any number of years, and he's a technologist and architect. I'll just start off with before Barney comes in, right? Like, I'll just start off with basics of trading, right? Like, there are many questions, like, I've heard a lot of terminologies and jargons about like, algorithmic trading, automated trading, and then there are like equities, derivatives, and so on. But before all those things, right, like there will be fundamentals of trading, right? Like, what is it trading, right? Like, so I'll give you start off with a very simple example, right? Like, trading is like, as we everybody know, right? Like, it's just nothing but buying and selling of financial instruments. But what are the different financial instruments? There are a lot. But as of now, just trading, just say, I mean, you buy something and you sell something, like when comparing to the olden days, right? Like, you've been exchanging commodities and so on. But like now it has gone in, like, you buy something and then you sell something. The simplest of example is, right, like we all have, I mean, we decide to buy a jewelry, and then We say, okay, we see the market price. The current market price of 1 gram gold is somewhere around 4,000 rupees. And then we decide, okay, I mean, there is a shop nearby. I go there and then I see the price of the 1 gram gold is like 4,000 rupees. I said, okay, here is my 4,000 rupees. And then give me a 1 gram gold. So the jewelry owner, right? Like, the store owner will give you a handover like 1 gram of gold, and then you give 4,000 rupees. So that's a trade, right? Like you bought something and then he sold something. That's a trade. And then down the line, like 2-3 days or 10 days later, you see that the price of the gold has gone up to 5,000 due to some increasing demand, 1 gram of gold. And then you think, okay, there's a nice opportunity, right? Like, I put in like 4,000 rupees for 1 gram. Now it's at 5,000. So let me go and sell it. I mean, you either go to the same seller where you bought it from, or you go to a different person where you say, look, I have 1 gram of gold, like, the market price is 5,000. Okay, he said, okay, yes, I'm in need of gold, like, here is your money, and give me the gold. So this is a complete trade, right? Like what has happened, right? Like you first bought a jewelry, and then for 4,000, and then you sold the jewelry for 5,000, and then you made an instant profit of like 1,000 rupees, right? Like so this is an example of basics of trading, right? Like so when you do that on a large scale, we'll talk about that like very soon, right? Like how it actually expands. And this is the basic of every trading, right? Like there'll definitely be a buyer who is actually giving money. There's definitely be a seller who will either give an instrument, a financial instrument, or whatever it is, right? Like a commodities or whatever it is in the background that is being exchanged. So this is the fundamentals of trading. Just like keep this example, right? It'll be much easier to understand, right? Like what's profits and so on. So in the same example, right, if the gold prices go down like to 3,500, like some point of time, what do? You don't need to instantly go and sell it, right? You wait till either the gold price go to 4,000 per gram, or like, you wait till to 5,000 to gram, and then you sell it later. So, and then you'll be like having a waiting period. You hold it because you paid it and so on. So this is how exchanges, this is how the entire trading works. Okay. Interestingly, before I move on to anything, right, I just want to touch upon like, okay, trading is fine, and then we hear about a lot of things called exchanges and all those things. What's all about that, right? Like so in the same example, right, like, you went to a jewelry shop and then you bought like 4,000 worth. How do you know that is actually the fair price, right? Like, how do you know whether the jewelry shop owner actually upped the price from the actual price of 3,500, he sold it to 4,000, right? So do you need a fair price of what actually the gold price is on that day, right? That's why the exchanges are there. Okay, so there is a centralized place where, I mean, that's what we call it as a market, where you go to that particular place and then you say, for that particular instrument, be it gold or whatever it is, you say, okay, this is what I wanted to buy, this is my price that I wanted to buy. And then you see a lot of other sellers coming into the same place and look, I'm ready to sell at 4,000, I'm ready to sell at 3,800, I'm ready to sell at like 3,700. Likewise, there will be a lot of other people like, queuing behind you saying, okay, I'm ready to pay 4,100, I'm ready to pay for 4,200 and whatnot. So what is market? Market is a place, is a collective place where you can see all the buyers for a particular instrument, and you can also see all the sellers for a particular instrument, and then you can actually decide what is a fair price, and then it's been publicly displayed to everyone. So there is no hiding. I mean, of course there is like, dark liquidity and so on. We'll talk about that later. But in general, it's a place where you can publicly see what is a fair price of an instrument which you can buy or sell, and you can see how many people are actually ready to buy at what different prices, and you can decide upon whether it is a fair price or should I adjust my price accordingly. So that's in short, right, like, on trading, and as well as like why the exchanges are there, because that's a centralized place, right? Like us, and also it is regulated by many institutions. Like, for India, it has been regulated by SEBI, and then like in US, it is regulated by SEC, Securities and Exchanges Commission. So they are there to actually make sure that every trade that has been executed in the market, which are actually fairly done on following all the regulations, and that's how a small trading, and then it goes into exchange, and then it's been regularized by the exchange commissions and whatnot. So that's the brief intro, and I see Bharani joining in as well. Bharani, I've just gotten started with like the basics of trading.
Okay, thank you. Sorry for being late. I thought the session is at 2.
Right. So in terms of like the general questions, I mean, on the trading itself, like what I've explained on the tradings or all on the exchanges. Any questions on that front? I mean, right. I hope I'm audible, or are there any questions? Or?
You are audible to me, Murthy.
You are. So I think I'll start off by asking you both, how did you get involved in finance?
Right, Bharani, do you want to go ahead first, like with your experiences?
Yes. So I think it's been 10 years now. We've been working on specifically capital markets, and within capital markets, we have been working on equities, equity-based algorithms, and recently, in last 1 year, in crypto. Right. So our journey was mostly, meaning at least my journey mostly was on technology front within the financial services industry, and meaning we started with a company called Deep Value, which is an algo trading provider for New York Stock Exchange. And meaning our initial role was to do backtesting, build a backtesting framework that would ensure the algorithms work properly. And meaning, but with numerous US banks, right? Meaning we're involved in working for their cash equities division, working for their derivatives division, their swaps, options, and then meaning we got introduced to various trading platforms, various trading systems like meaning order management system, execution management system, and then algorithms, right? And today, meaning I think with the advent of crypto and AI, so there are a lot more that we have done in last 1 year, which is more meaning which is more trending in market today, which is meaning using an AI bot to do trading, use meaning sophisticated algorithms to make decisions to buy stocks, right? So it's been a 10-year journey so far, right? And it's almost a technology based journey for me, and always helped in building algorithms for equities trading and crypto trading so far, right? And I think Murthy would cover more from a operations perspective, right? Because Murthy has seen how trading happens in real, whereas we always do the back end work of getting things done, building the softwares necessary, but Murthy manages the real trading in front of customers, right? Murthy, would like to go ahead?
Yes, sure. Thank you for that question, actually. So, yeah, I mean, I was basically a finance student myself. So, I mean, always had like this interest of like, I mean, like, finance all the way. But to get into finance, like, especially the algorithmic trading, it was the toss up, right? Like, as a fresher, right? Like, I had like multiple offers, right? Like, and then I decided to actually take on algorithmic trading, which was like very interesting on those days. So, and also like when I told people like way back in 2006 or 2007, right, like as I'm into algorithmic trading, people in India, right, like, or not people generally, right, like it's been like 1.5 decades before, right, like, so people did not have much of an understanding about what algorithmic trading those days were, right? Like algorithmic trading was like hardly like 9% of the overall volume in India was contributed by algorithmic trading on those days. They were asking me questions like, I mean, are you like into some stockbrokers and all those things? Said like, no, this is something different. And it was tough to explain on those days. But my journey in Deep Value, right? Like I was one of the earlier employees of Deep Value itself. When we started off in 2006, I was the second employee of the company. And then our goal was to actually go much deeper into the algorithmic trading. And then we chose the most sophisticated market in the world is the US market, right? Like, so we didn't have much of an entry in the Indian markets, but like we went into US market directly. And then we ended up, I mean, it was a 4-5 member company. And then like when we suddenly said, okay, we're going to provide algorithms for one of the top exchanges and the historical exchanges in the world is New York Stock Exchange, right? it was very interesting. And then that we had, of course, a lot of challenges. But my journey toward in deep value, right, first initially I was the person who was heading the operations team, which literally means I was responsible for every trade that has been traded via our algo trading system. And then I went on to lead product. So I was responsible for all the new products, which is much fancier, and then the customers likes it. And then I went on to lead the QA team additionally as well, right? I was responsible for that. And then finally, as Barney said, right, year before, when everyone is talking about crypto, and then we ask ourselves, look, like the world is talking about crypto in 2006. Everybody was talking about, nobody was talking about algorithmic trading, but we ventured into it. Now the world is talking about crypto. It's time for us to jump in, right? So that's when we actually set up a crypto proprietary trading division, which myself and Barney, both of us, were co-leading in from India. And then we were actually trying to see if we can have algorithmic tradings and much more fancier stuffs, right? Because the technology has developed much more from on all those years, right? We were planning on all those things. So yeah, that's how my journey was, from 2006, looking back. I mean, finance was understanding the market microstructures, getting deeper into the markets, right? It's always kept me energetic, right? Every day there is new technologies, new things that we learn out. It was just keep us energetic all way through. And then as an operation thing, right, in deep value is quite big, right? And then I mean, at one stage is right, I had managed the entire US equity volumes, 5% of the entire US equity volume was traded via deep value. And then of course, I was the operations head, right? Traded trillions and trillions of dollars, all through my career. And then we just lived with the trading systems, algo trading systems, for a long time. Yeah. Yeah, that's all, I mean, about how I'm getting into algorithmic trading itself.
My first question goes to Mr. Murthy. Back in the days when the company was young, algorithmic trading was a very new concept and was totally new and in contrast to the traditional trading markets in India. How was it to shift from traditional ways and try these newer technologies?
Right. I mean, you're absolutely right. So, I mean, this is a same example, right? I gave, 26, right? US was much more sophisticated market. The reason I keep saying is, right, because today in India, right, India trades about 50% of the overall volume is coming from algorithmic trading. In fact, less than 50% of it. But in US, it's somewhere around 70 to 80% of the overall US equity volume is actually coming from the algorithmic trading. So initially, right, when we started off, we had challenges because there were technology was just going up at that time, right? So when we started off, we didn't want it to actually put into India first, because for various reasons, right? First we wanted because much more advanced technology in the US, that is one. And yeah, I mean, it had so much of reception, in US those days. I mean, one of the main reasons why we shifted, or we started off to the algorithmic trading was this idea of uh, uh, NYSE is one of the oldest stock exchanges in the world, right? And they are a hybrid stock exchange, meaning, I mean, this is 200-year-old stock exchange where they still have a tradition of floor brokers, right? Back in the days before the computer era started, right? There are brokers who used to be in the exchanges, and they were actually either looking at some boards, or they manually have some holdings, and then that's how they exchange trading. So they wanted to continue their legacy, and then they have their tradition followed. So the first idea that which hit was what if, and then there is the electronic market, right, which started booming up, and then these flow brokers were actually having less of an impact to that. So the first idea was of course from our CEO, but to see if like, can we actually give them an algorithmic trading and then make these floor brokers compete with an electronic market? That's how actually we started. A lot of challenges in the beginning, but yeah, I mean, the more that we understood the technology and the more the thing that we wanted to actually advance from the technology perspective, I think it was actually it was good. But initially, as you said, like, there were challenges, but it went through sailed smoothly. I mean, when you're in algorithmic trading, right, you got to keep looking at constantly on the technology advancements, right? Like, how we can actually put it better, and then, like, keep growing. And yeah, and that's how actually the journey was.
That's a great insight to start with. My next question is for Mr. Bharni. What crucial role does technology play in entire algorithmic trading?
Right. Okay. You hear me?
Yes.
Yes, sir.
Right. Okay. So when we speak about algorithmic trading, right? So why would someone go for algorithmic trading? Meaning, why not manual trading, right? Or meaning, why automated trading and not manual trading? Because see, you want to realize something. Right? You look at some stock price. You want to make a decision. You made a decision and you want to make some profits. Right? How quickly you can react to that market situation today? Right? Meaning, in older days, how frequently the market prices were changing. Right? Let's say we take a stock for example. How frequently the price of the stock changed is not the same the way the price changes today, right? You see how frequently the stock prices change in the market today. You can see price changes in meaning less than microsecond intervals today, right? So is it possible for a manual person to meaning react to changes that are happening in market today if you want to realize profit, right? That is number one. Not really, right? As long as you're not buying something like 2 stocks or 3 stocks of one company which you want to do for a full day, that's fine. But if you want to do an institutional trading, if you want to buy meaning thousands of units of multiple stocks, then manual trading is not possible, right? Then you wanted to go to automated trading. So what automated trading does, lets you trade automatically rather than a manual intervention. You feed in your data and then it starts trading itself. Then one step ahead, algorithmic trading, right? What is algorithmic trading? In automated trading, you decide the price, you decide everything. You just tell the, let's say, the system to just chunk it and trade. That's it. But it doesn't make any decision for you, right? It just executes the order in an automated fashion rather than you manually punching it every time. But when automated trading is not sufficient because see the price changes over time, right? Say for example, you wanted to buy 10,000 units of a stock. Is it possible to execute that in one point in time, or you want to execute that over a period of time to get the best out of the market, right? Say for example, you want to buy 10,000 units of MRF today, right? So will you buy that all at one shot, or you want to buy MRF 10,000 units today at the best price available in the market today, right? So in order to do that, what you do, you spread your order, you wait for the best opportunities that happens in market for a given day, right? And this depends on how long the order can be, right? It's always the decision that the trader makes, whether meaning the order can wait for 5 minutes, or you want this to be executed in 1 hour or one day or 3 days, or meaning how many days you want, right? It's always decision on meaning how fast you want the execution to be, or how better you execution meaning you want the execution to be. So it depends on that. You choose a specific logic, execute the logic to best achieve your expected results, be it faster execution or be it best price of execution. It is your decision that makes you drive a specific logic towards achieving it, right? That's where algorithmic trading coming into picture. So now, since market data is meaning of very fast pace, and you have to execute logics at very fast pace, get the data from the market, parse the data, understand, make a decision, and then react to the market all within a microsecond, or let's say a millisecond, right? To begin with, it's not definitely possible for a human person to do it, right? So that is when you need softwares, right? You need systems to do this for you. And meaning obviously when we speak about systems and softwares, it is obviously the technology, right? Meaning whatever technology we use to ensure the promptness and the nimbleness you show in meaning reacting to a market situation, right? That's where the importance of technology comes in place uh, for automated trading or algorithmic trading, right? So in our case, any algorithm that you want to build, you build certain models, you understand meaning how the model behaves based on historical data, you do some back testing, ensure that the algorithms you develop executing as expected. Meaning if I want to build an algorithm to aggressively trade and finish as quickly as possible, get me the volume from market, you should test that with some backtesting framework to ensure that it does it in real time, right? Similarly, if I want to execute an algorithm, slow but steady and a best execution price, say for example volume weighted average price, even for that you should have proper backtesting framework to ensure that whatever ideas you built, whatever solutions you built is working as expected, right? So apart from all this, we spoke about market data being meaning rapidly fast, right? You say market changes every microsecond, the prices change every microsecond. In order to capture this and understand and make a decision, you need best out of the technology in the world today to make faster decisions, right? Understand the data faster, make faster decisions, place orders faster, get executions faster. And to achieve all this, you definitely need the best technology in market today. So I think that answers the question.
Thank you for that insight, sir. Moving on, let's dive into the basics of trading. How is algorithmic trading shaping today's world? What is in it for an individual to shift from traditional trading to more digitized one?
Right. Yeah, I'll take that. So, I mean, as I said, right, like, I'm just repeating the same example, right? Like, if you see the world like 15 years before versus like world, right, the trading industry, like right now, right? Like, so it has evolved a lot, like more and more number of people actually coming into the algorithmic trading. And also, like, how the digital zone, especially, right? Like when you're talking about it, right? How are we actually doing transactions with the bank like 10 years before versus how we doing in the current generation today, right? Like with digital bankings and so on, we do everything at touch of our fingers. So I mean, that's how algorithmic trading and the trading industry has actually grown over the years. And the more important stuff is, right, like, as Bharani mentioned, the reason why we think that our reasons are like, individual to shift from traditional to those. I mean, it's a time taking consuming, right? Like it's a time consuming stuff. I mean, there are a lot of supporting factors, right? Like to actually to decide. I mean, let's say if you want to buy a gold, like there are a lot of supporting factors. Like it could be the demand, it could be the supply, or it could be anything, right? Like so, I mean, the technology helps you to actually analyze all those things and then make a decision to buy stocks or or to do any sort of trading. So. I mean, if you look at from here, if you look at the algorithmic trading in the next like 4 or 5 years, right, it's going to grow. I mean, it's going to go at $20 billion that's going to get traded like in a day from here, right? Like it's going to grow at least 11 to 12% going to go up. So if you see also, like if you see the advancement, like what US markets have actually shown, which they're there for a longer time, of course, like use of a better technology, right? At some point of time they were also like us, like it's a developed nation, but like they were like us, like at 60%. But today, right, like they are like at 70 to 80% of the entire volume is being traded using an algorithmic trading. So you are at a position like of course we're going to go advance, and like we are one of the great nations in developing and so on, right? Like so we have to step forward and then say like instead of looking at the manual tradings, right, like we can say how we can actually go ahead of a lot of people. Let's say if there are 2 million people who are trading, right, like say in India, and then half of them will not be actually like doing an algorithmic automated trading, right? Like they'll be manually, and then like another half will be doing only automated trading. Another half would be like doing an algorithmic trading with some indicators and backtesting. So if you actually see yourself in a queue, and then if you want to enter today in an algorithmic in a trading industry, right, if you want to bypass a lot of players and then go forward and do, you got to be in the first the 95th percentile whatnot, right? Like where like the less number of people, and then you got to compete with them instead of like competing with others. So that's how like the digitization and the algorithmic trading is more important than the traditional trading, which was like more of a manual stuff.
Thank you for breaking it down, sir.
Sorry,
Moving
there was
on,
a connection issue. I just came back. Did I miss any? Murthy?
No, Bharan.
Varsha?
No.
Okay.
no, sir. So moving on, how to step up an algo desk?
Okay. So you mean set up a algo desk, right? Hello.
Yeah,
Can you hear me?
Varsha, yeah.
Yes,
Varsha, is
sir.
it more of a
Yes,
setting up an algo desk?
yes, sir.
Right. Okay. So I think we spoke about meaning at least fundamentally why would someone choose algo trading, right? So now when we speak about setting up algo shop, right, you need to understand meaning when you should venture into algo. Hello,
Yeah, go ahead, Bernie.
was there a question? You're able to
Please
hear
go
me
ahead.
clearly, correct? Yeah.
Yes,
Okay.
sir.
Yeah. So now we need to understand why you need to set up an algo desk and what are your requirements, right? Meaning each business or let's say any new thing you start has a purpose to it, right? So you need to understand what you want to achieve and decide meaning factors that are required to achieve what you want to execute in this, right? And specifically for algo desk to be established, the first and foremost thing is you need to understand meaning your meaning data analysis strengths, right? Pick up a proper uh, uh, data analysis team and ensure that you have quants, meaning a quality quant group in your meaning in your team to ensure that they can better understand the market, they can better understand the data that you're getting, and meaning make better predictions out of the markets, right? So and meaning when we talk about setting up algo markets, right, I think we always speak about the fantasies of meaning trading in microseconds, trading in milliseconds, making a lot of money, but there are always risks associated, right? Anything that gives you more, there is always risk associated. So you need to ensure meaning whatever you do is not going to take you back meaning by a large step, right? Because there is always risk associated with algo. If it can make money for you, it can always meaning make you lose money as well, right? So you need to have very good understanding of the market microstructure. You need to have very good understanding of what can go wrong, right? Typically when you're building algorithms, how much checkpoints, what are the security measures or checkpoints you got in your system to ensure meaning there is nothing bad going to happen, right? Because it is not just your money, right? There are people investing in your algorithms, there are orders from other investors which are going to be executed in a given day. So if there is something going wrong, it's not just us, right? It's not just our orders, it's the orders of the customers also that's going to be affected, right? So before setting up an algo shop, most important parameters: a good data analysis team, a good quant team to understand the market microstructure, understand the data you've got, and a good access to a quality data, right? That is very, very essential. I have a very good analytics team, I have very good quant team. What will they do without data, right? Meaning if you cannot provide them good data, when I mean good data, you need to give them, let's say, meaning all the trades that have happened in, let's say, last 4 or 5 years minimum, right? And all the quotes that have happened in all last 4 or 5 years for all the stocks you're interested in, or let's say take Sensex, right? All the stocks within Sensex, take Nifty, take all the stocks within Nifty. Do you have quality data from a historical perspective, right? Last 5 years, last 10 years, for the quants or the data science team to understand, analyze, and make good predictions, right? Build good models, because in order to build good models, you need data. As much data you give to your model, it is more as intelligent as possible, right? It can understand better, it can make better predictions. And at the same time, meaning we spoke about data analysis, we spoke about quants, we spoke about having good data and good technology, right? You definitely need a good technology team who will build meaning top of the world framework for you, which will handle all the meaning technology constraints you have, right? Say for example, we said the market data changes in microsecond terms, right? Do you have enough technology built in to consume the data at the pace it is coming in, right? Do you have technology which will consume this data, make better decisions, and then meaning spit out decisions that will be beneficial for the entire investor group, right? So you need to understand you have a better technology group, you have a better data analysis group, you have a better quant group, you have better data in hand to begin with an algo shop. This is not the ending, right? This is the beginning.
Thank you for that detailed answer, sir. Diving into market and exchanges, what is the difference between Bombay Stock Exchange and National Stock Exchange? And why do you think there are different stock exchanges required?
I'll take that. So first of all, difference between Bombay Stock Exchange, which oftenly called as BSE, and then National Stock Exchange, which is called as NSE, right? Like it's two pioneers, right? Like both of them are actually handling like most of India's volume. First difference is like Bombay Stock Exchange is a very old one. I think I think it was started off in 1800. And then when we started off, like when you say it's 1800s, right? Like, you know, you can imagine it was like, you know, a pre-computer era and all those things, right? Like, so they were doing a lot of manual tradings and so on. Whereas on the other hand, National Stock Exchange, right? It's a fully electronic exchange. When they launched in 1992, I think, or later, like sometime during that in the 90s, right? They came in like saying, okay, we're going to go fully electronic. Okay. So the primary differences between a Bombay Stock Exchange or a National Stock Exchange, right, is one is a hybrid one. Basically, it started off with like a lot of manual stuff, and then slowly when the technology evolves over a period of time, of course they have started electronic trading, right? Like it's more of like a hybrid exchange, or like, you know, they started off little late in the electronic thing. And National Stock Exchange, on the other hand, they are actually like fully electronic. And there are a lot of stocks. If you need to trade a financial instrument, right, like, you know, the stock, it has to be listed in any exchange, like any of the exchange. You can list it in Bombay Stock Exchange. It has like 5,000 plus companies listed. And then you have other hand, National Stock Exchange, you have like 1,600 plus um, stocks listed, right? And of course, like you can trade like, you know, this and there, as long as like, you know, both are allowing to do that. And also, like, you know, National Stock Exchange has its own advantages, right? With so much of advancement in technology and all those things, they are like sort of a number one derivatives market. Like, you know, these words could be like, you know, a bit like, you know, I mean, like out of, I mean, like a Greek and Latin at this time for maybe for some, but like, you know, assumes like there is a derivatives world, right? Like, you know, which the stock exchange handles, like futures and options, like, which is based on an underlying financial instrument. But yeah, I mean, they have some good technologies. Bombay Stock Exchange has a lot of good companies that has been listed. And this is not just in India, right? Like even if you take the example of US exchanges, right? Like there are primarily two exchanges, right? Like, you know, is called a New York Stock Exchange, and there is a NASDAQ exchange, right? So NASDAQ, again, like it was more like National Stock Exchange here, right? Like they were like fully electronic exchange. And NYSE, again, it was like a fully traditionally had floor brokers, and then like they came into this hybrid model, and then they are adapting to the the technology now. The reason why you need different stock exchanges, right? Like first of all, any country, I mean, you can't have one stock exchange for the entire world. So you need stock exchange for that particular country, and it has to be governed by a regulatory committee, right? Like, or by the government, because it's a financial industry. And then if something goes down, like in the stock exchange, which is quite crazy, right? It's not just going to affect the stock exchange or the investor. It is going to affect the entire GDP or the financial things of a country as well. So two stock exchange, that's why the two different stock exchanges are required. Like even if the I mean, first of all, a balance of load, if one goes down, the other handles it. And also as well, like they one carried a tradition, other carried, like, you know, the electronic the technology advancements and whatnot, right? Like, so even in the recent case, right, like maybe a month before, National Stock Exchange had a huge glitch, right? Like, you know, where they had to be, I mean, there was a technology glitch or connectivity glitch, but they had to go offline, meaning they were not able to accept any orders because of some connectivity issues that they had downstream. So they had to go offline for like good 3-4 hours, right? Like, so what happened to the market on the day, right? Like, so Bombay Stock Exchange said, okay, fine, whatever positions that you have in NSE, like come and exit and like, you know, close the positions in BSE. And that is one, I mean, many companies, even like the brokerages, did that. And then both of them extended their trading sessions, like, you know, aftermath, like, you know, regular 4 o'clock trading session, they 3:30, they have extended to like 1.5 hours for people to close it. So that's why you need the balance and, like, you know, the technology advancements. And that's I think that answers the question, I believe.
Just to add that, right, meaning it is simply to break the monopoly also, right? You take any industry today, you always have competitors, right? Nobody likes monopoly. Say for example, they speak about Amazon and Google being very big in technology, and they want those to be broken down, right? Nobody wants one person to rule an entire industry, right? So if you have competitors, you promote competition, you promote quality of service, right? And at the same time, you ensure that, meaning there is better price discovery. When you have better markets, you have better price discovery. You let many people come in, right? Meaning if you have multiple platforms, that opens up many people to participate in the market and encourage people to, meaning there are companies who are listed on both exchanges, right? What happens, say for example, I'm a company who want to make myself as public. Okay, I went to an IPO in NSE. right? I listed myself and my stocks are trading. Now I want to get more money, meaning raise more money from the public in order to do something more, right? Something new. There are two possibilities. One is either I can go and do a further public offering, right? Or I can go and list myself in another exchange, right? Where I can list myself and then get money from the other market, invest that in my business, grow my business at the same time, meaning make my stock available to people who are accessible in that market as well, right? Be it NSE or BSE, meaning there are investors in BSE, there are investors in NSE. If I want to meaning pull from both people, then obviously I list myself in both the exchanges. It's as simple as that, right? Meaning to avoid monopoly, to encourage competition, to encourage quality of service.
Thank you. That was a great input. Moving to the technology part of the trading, which are the commonly used programming languages employed by the traders?
Okay, see, when you say traders, right now we are specifically talking about algo trading, right? So in algo trading world, speed is everything, right? Meaning how quickly you can process and how quickly you can respond is the most essential factor. Having said that, meaning if you go back 30 years in technology, everything was a monolithic architecture, right? Meaning there will be a single piece of application who will do everything in a sequence, right? It gets data, processes it, makes some decision, then meaning executes the decision. But meaning in today's world, do you think that is possible? Obviously no, right? Let's say because you're trading thousands of stocks at any given point in time. You want to make decision for all the 1,000 stocks at the rapid pace you are getting in market data, and it's not just one algorithm, right? There are 10 different algorithms working on 1,000 different stocks, making decisions and then executing those decisions. Now how many, meaning just look from a work perspective, right? What are the different tasks that you're executing? There is one person gathering market data for you, there is one person understanding the market data and trying to convert that into a meaningful information based on which you can make decision, right? There is another person who is making a decision, being a decision engine, decides what has to be done, and there is final one person who is taking the decision,
I think there is some connectivity issues.
right? Which means placing an order into market, getting the result. Have you lost me?
Yeah, there was a break, Barney, but now it's okay.
Yes, sorry, 1 second. So was talking about meaning different tasks that are to meaning handle a simple piece of work, right? So if you want all this meaning to work in a fast manner, you have to ensure that you use the best technology that is available to you in the market, right? And similarly, when we speak about programming languages, you need to ensure that you use the right programming language in order to handle the work at hand, right? Not all programming languages will excel in doing everything at one point, right? Say for example, people say the execution speed of C or C++ is always better than other languages like Java or Python, right? But that's not meaning suitable for all use cases, right? You always meaning don't code in C. Meaning if everybody is coding in C, there is no Python, there is no Java or other languages, right? So each programming language has its own meaning benefits, plus points. At the same time, there are certain challenges. So it is up to you to choose the right language based on the use case that you're executing, right? But in general, meaning since you're the question,
Barney, there was a break again from your side.
Bharani sir, you could try switching off the video camera. I think that would help with the bandwidth. Because sir?
Yeah, I think his video is actually consuming the bandwidth. Barney, if you could just try with switching off your video.
now really?
Yeah, now it's much better, Barney.
Yes, sir.
Okay.
We
Yeah.
couldn't hear you for the past 1 or 2
Actually, I was
minutes.
on a mobile hotspot because there was a power outage. I think I'm back in Wi-Fi now. So
Okay.
what I was saying is, meaning instead of saying best technology, I would say popular technology or popular programming languages, right? So typically people use C++, Python, Java to build their trading bots or trading algorithms. There are people using Go language also now, right? But it is always the use case that you that you have in hand, right? And there are hybrid models in most companies you go. No one company would basically build the entire solution in one language for the benefit of the language itself, right? So there would be some, let's say there is a notification piece, they would build the notification piece on one meaning programming language, right, which is best suitable for building a notification service. They would build the matching engine using probably using C or C++, that is a fast meaning gives fastest execution possible, right? So it is always a meaning conglomeration or a hybrid mix of various programming languages you use in building a trading framework. But in today's world, most popular are C++, Java, and Python, I would say.
Okay, sir, that was a very detailed breakdown. Thank you. How is machine learning and artificial intelligence playing a role in algo trading?
Okay.
I'll
Put you
start off.
good, I'll follow you.
Yeah, I'll start off and then and then you can follow up, right? Like, so machine learning and artificial intelligence, again, right? Like with technology advancements, right? Like, you can actually, the machines are much smarter, or we are making the machines much faster to actually understand a lot of things with artificial intelligence and coming. But let me give you a small example of what machine learning and artificial intelligence actually could do in trading, right? Like, so let's say if you feed historical data, right? Like probably like 3 years of data and 4 years of data, and like across different segments, and then you feed it to a mission, and then the mission will try to understand, okay, this is how the data was, and this is how the mark, and then you give them a period, right? Like, it basically it will train, right? Like, so likewise, and then you keep as much as data to a mission, and then if you're, yeah, sorry, was there a question to me?
No, sir, please continue.
Yeah. When you give as much as data to a mission, what do you
Murthy, you're coming choppy. I'm not sure if that's only to me.
uh, is it for everyone, or is it for only for Bharani?
No, sir, it's clear for us.
Yeah, Bharani, if you could try
Murthy,
turning off, can you try turning off your video, Bharani?
video, right? Okay, I'll do that.
Okay. Yeah. So yeah, sorry about that.
Yes,
Like,
I
so
did, Murthy. Go ahead. Sorry to
yeah,
interrupt.
what we were expecting from an algorithmic trading, or artificial intelligence or machine learning, right? I mean, we were trying. Let's say there are a lot of predictive models in artificial intelligence and machine learning. If you actually feed a lot of data into a machine learning and then or AI, I mean, if the AI could tell you, okay, look, for this particular stock, I have actually done a lot of back testing, and I have understood the model, I have understood how it actually going in, and then here is my prediction. And then in a simple case, right, if a machine could tell you this particular stock, let's say stock A, if it's going to go up to like 4 rupees or 10 rupees in the near future, right? And then of course, like everything coming up with the challenges, right? Like, you can't have artificial intelligence or machine learning with 100% accuracy, right? Like 100% prediction rate. So there'll be ifs and buts, but I mean, that's why you actually win a trade or lose a trade. But imagine like if a machine telling you, right, okay, I have analyzed this particular stock for over the last 4 years, I have tested it, you can now give me the real-time data. Okay, I know how the stock will move, I understand the trend of it. Now you give me the real-time data, I'll tell you what is the future of the stock. Okay, I mean, if you imagine from the simple perspective, right, that is tremendous, right? Like, if a machine can tell you a prediction of a future, and then you are in a present, and then if you have even at the 80%, 90% prediction rate accuracy, you will win, right? Like, so that's why actually, I mean, instead of like having many indicators and so on, the AI and machine learning, right? Like the AIML actually plays a very, very important role, because at time t, right, like the machine tells you, okay, I mean, I'm looking at the data for so long, and I'm seeing that like this is going to go up by 4 rupees, that's in the future, right? Like, what will you do on a simple case, right? Like, don't need to know about much of a trading, right? Like, you buy now and then you go and sell, like, it hits 4 rupees, right? Like, goes up. Likewise, right, like, you can do that. So the more and more the machine understands the data, I mean, the data is very, very key in AI, and then like, it understands the data, and then it takes decisions, and then it gives you prediction. Of course, you got to do a lot of testings, and I mean, like, you got to make sure the predictions are there, and then back testing results have to support you. But I mean, it plays a huge role, right? Like, in telling you this is the future, and that's for an algorithmic trading. Bharani, you want to add something?
Bharani sir?
Right. I think he's still having some issues, but like, yeah, we can go ahead, Varsha.
Okay, sir. Thank you for that insight. Let's move on to market data. Why do you think market data is necessary?
All right. Yeah, that's another interesting question, right? Because I mean, we did speak about this market data multiple times in our discussions, right? Like, so market data is very crucial, right? Like, because on the following grounds, like, you need to know what is currently going on, right? Like, of course, as a manually, you can sit down and then you look at a chart and say, like, these are the best prices for the stock A, these are the best prices, like, people ready to sell for stock B and whatnot, right? Like, but I mean, if you wanted to actually any algorithms to understand, right, like, a pattern of of a market or a pattern of a stock, or to, I mean, all this things, this AI, like an ML we're talking about, market data is very, very crucial on the following aspects, right? First of all, there is a concept of this back testing, like, we're talking about. What is back testing, right? I'm sure many of you know. You actually develop a strategy, right? Like, whatever it is, wake up every minute, like, like buy a trade, that is a strategy, right? Unless you have a market data, be it is real time or a historical market data. Historical is like, whatever happens in the market, right? Like, let's say I buy it like 10 rupees, another one buys it like 12 rupees. Markets records, the exchanges record every entry of it, and even if you send some order, the exchange is recorded. So market data is nothing but the collection of events that has happened on a given day, for a, or every microsecond or a nanosecond, like that's events that has happened, that is are all being captured in the name of market data. So you need first the real-time market data to actually, based on the market data, you can go and trade it. For example, right, like, I mean, many of you could ask, like, there is Google Finance, there is Yahoo Finance, which gives me data, right? Like, I can look at that and trade. Why do I actually need a real-time market data, right? Is it not real time? The answer is like, I mean, market data are actually, I mean, first of all, it's the originating place is exchanges, because everybody actually goes to exchange and then they submit their orders, and that's how the market data has been generated. And the trade first happens in exchange, and they give it to the lower lane, right? Like, lower lane, I mean, like, to all the other vendors, like, they distribute it. But I mean, let's say if you look at Yahoo Finance, if the data is 1 minute delayed, or like 30 seconds delayed, or even 20 seconds delayed, that means somebody had already looked at the data, okay, and then somebody has already made a decision, and then somebody has actually made a profit. You are actually looking at a later data, and then which will obviously result in, like, not making a correct decisions. So the market data, which is first of all real time, you got to be like really accurate to the nanoseconds or microseconds, like you got to have the data. And for historical market data, you need what happened in market, so that you can replicate in your backtesting strategies, and then say, okay, on this market's conditions, like, okay, I would have executed this much of shares, and then I would have made this much of profit, and these are my ratios, right? To do all those things, that's why you need actually a good market data.
Okay. Murthy, I'm sorry, back. Sorry for the repeat technical issue.
No problem, Barney. We just spoke about market data.
Okay, right.
So adding on to that, from where can one procure market data like historical or real time and other data?
All right, Barney, you want to go ahead, or shall I go ahead?
Yeah, I think in general the market data providers are Bloomberg, Reuters, right? In the global business arena, Bloomberg and Reuters are popular market data providers for most of the markets. And in India, I think both BSE and NSE provide market data themselves, right, for algorithmic trading or automated trading. And there are some small-time market data providers as well. But meaning for a consistent market data experience, I think typically we should go with Bloomberg, Reuters, or the market data that is provided by the exchanges themselves. Right, in India, it's BSE and NSE.
and also there is a cost associated to it, adding to that, right? Like, so I mean, the more detailed market data, if somebody provides for a historical time range, of course it's going to be really expensive, because you're replicating the market using the data like historically, right? Like, so that's important. I mean, you can often hear about like people saying there's like free APIs, like free data and so on, but they're not going to give you like every intricate details that has happened in the market, right? Like, maybe they'll tell you like only the trades which has happened in the market. They won't tell you like, how you were in the queue, or like, I mean, like, to the depth of the price itself. When you say depth of the price, right? Like, when somebody sent an order at 10 rupees, somebody sold at like, 10.1 rupees. That's one level, right? Like, that's a top best price of a stock. But there are like a lot of intricate people, like, many people who would have come in with 9 rupees, 9.2 rupees, 9.1 rupees. All those are called a depth of the book. I mean, when the depth goes up, and when the intricate details are high and the historical, there is a cost associated to it. Yeah, I mean, that's how it is. And then the originating data itself is from the exchange itself, as I said, right? Like Bernie said, like NSE and BSE, they originate the data and they distribute it actually to a lot of Bloomberg buys it from the exchange, or like, Reuters buys it from the exchange, and a lot of other people, right? Like, they buy it and they have to have a distribution license to actually give it to the people. There is a cost associated to it.
And to the depth of the book, Murthy, they refer to as level 1 and level 2 data, right? So level 1 data typically has the quote information, right? The current best buy and sell price available in the market. And level 2 is where the depth of the book is present, right? Meaning from top of the book prices, meaning what is the best price available now to buy or sell a stock. Apart from that, what are the different prices at which we can see orders persist, right? Say, for example, if someone could buy at 9 rupees now, there will still be orders waiting to buy something at 8.5, right, or 8.2. That will still be in the book, but that will not be at the top of the book, because you are not giving the best offer, right, or not the best bid. Whoever is bidding 9, he will be displayed on the top of the book, or the person will be displayed on the top of the book, which is the quote, right? The best price across the board available to buy something is the bid, right? And the ask is something, meaning the best price that is available in the overall book to sell, which means, meaning the ask is the price at which you can buy something, bid is the price at which you can sell something available in the market. So this is available as part of level 1 data in the code, but depth of the book is available as level 2. So every time you are going to buy market data, there are different price agreements based on whether you need level 1, level 2, and I think recently they are speaking about level 3 as well.
That was a great detailed breakdown. Which data provider gives true tick data for Indian markets, not second snapshot data?
Yeah, I think it is. It is. I think we just like, it's the same, right? Like, true tick datas are basically the intricate details. That's what we were talking about, right? Like, so it is again Bloomberg, Reuters. Like, I'm not sure. Like, they might be a little expensive, uh, uh, but yeah, generally NSE itself provides a lot of data. If you go to the NSE website itself, right? Like, they give you a lot of data, and BSE, of course.
Thank you for that input. Going back to the technology aspect, what role does containers and Kubernetes play in algo trading?
Right.
Okay.
That's Barney. Yeah, go ahead, Barney.
Yeah,
You
you
can
hear me
master it.
clearly, right? I'm sorry,
Yeah,
meaning there is breaks on my voice. Is it clear now?
yeah, yeah.
Yes, sir.
Go.
Right. Okay. Yeah. So, meaning, meaning is Kubernetes directly impacting trading market, or meaning containers impacting trading directly? I won't say. Meaning there is a direct relationship, right? But meaning why are they important? We need to discuss about that, right? If you remember, we spoke about monolithic applications, right? When meaning initially when softwares were designed or systems were designed, they used to design everything together as a single application, and all of them will work, meaning in a sequence, right? Meaning one activity will be completed, then the next activity will start, then the next activity will start. This is okay when you're trying to work on a meaning a system which is not constrained by time at which it makes the work complete, right? But when you're talking about trading, and specifically when we're talking about algo trading and high frequency trading, you cannot make the system a monolithic system, right? Which means, meaning a decision 2 is based on decision 1 which is executed in sequence, right? That is never going to happen. Or meaning, let's say you want to run multiple threads, meaning there are intricacies or challenges associated with running meaning so many threads together in a single application, right? So that's when people started talking about microservices, right? Meaning what can you do to your system so that it can work in tandem, right? Work in parallel. What you have to do, identify actors who can do their role independently, right? Say for example, market data capture. Capturing market data has no reason to wait for anything else to complete, right? Say for example, capturing market data need not wait for the decision engine to make a decision, right? Market data capture is a separate activity. What you typically do is separate it out, keep that as a separate service that would continuously capture market data, provide market data to all other services who need market data to make their own decision, right? But in that case, market data provider need not wait for others to do their work, right? It will simply capture data, provide data, capture data, provide data. So that will be an independent service doing its own activity consistently. Similarly, the decision engine upon receiving market data, it makes the decision and makes decision available to others, but it need not wait for others to complete their work, right? Decision engine doesn't wait for the execution engine to send the order to market, but decision engine is only waiting for the input data that it needs. It can make its decision and make it available to everyone. So what you do is you try to break your monolithic application into separate components, right, or separate services, build them into small services that will independently work, finish their task, and make the data available for others to consume. So what happens now, since these are smaller services which are running independently, they can parallelly finish their job, make the results available for other services to consume at a faster rate. Right now, in order to break your meaning monolithic application into services, now you have to host these services into different places, right? Meaning you have to ensure that you have proper service manager or you have a proper process manager in place to ensure that all these broken pieces, microservices, run properly, consistently, and being continuously monitored, right? So that is when your container technology comes into picture, where you can containerize your application to ensure that you reap the best performance. At the same time, you have a platform where you can run meaning different environments within the same virtual machine, right? You need not buy multiple virtual machines or multiple machines to expand your solution. Rather, you use meaning Docker or any other containerization framework to containerize your application, ensure you run each service as a container, and ensure you benefit, meaning you benefit from a single machine, but meaning multiple container platforms where you can run your services in place, right? Now, Kubernetes is one technology that is excelling in orchestrating containers, right? There are on machines. Now you need to manage those containers and ensure that the containers are always up, right? Which means you're talking about meaning service health. Meaning, how do you know that all the container services you're running are in a healthy state? How do you ensure that all the containers are always running? Say for example, market data gatherer or market data capturing system crashing data or not, then at some point in time your system will be late where all the others would be waiting for market data, but that service would have gone down to an error, right? So what Kubernetes does is, Kubernetes is more of an orchestration tool or framework. What it does, you define, okay, these are the number of service units I want to run on multiple nodes, right? And Kubernetes always ensures the health of those many nodes are running on as defined in the configurations, right? So if let's say one of the system goes down or one of the service goes down, Kubernetes automatically turns on that specific service and always ensures define the number of services running on any given node or instance, right? So Kubernetes is more of an orchestration platform which ensures your containers are managed well and the health of the overall ecosystem is managed well, right? So does that answer your question? So now, since we know Kubernetes or containers are essential to split your application and manage them as microservices, essentially for any trading system, we need services to be split out and meaning make them parallel so that you can reap the benefit of time, right? So eventually, containerization and Kubernetes, meaning orchestration, is essential to build any effective trading system in place today.
Thank you for that great insight, sir. Let's dive into frequency trading. What is latency and what are the types of frequency trading?
Right, I'll take that. So what does latency means is like, the time that you actually get the market data. Let's say the latency starts from everywhere, right? Like, first of all, when Barney was talking about like containerization, like, separate containers to actually get the market data. Let's say if there is an event which happens in the market data, let's say in the market exchange, and then remember I was talking about this Yahoo Finance and Google Finance, like down distributed, like, data, right? So that will not going to work because that is actually has a latency added to it. So we first want to actually get as minimal latent market data. As soon as it happens, your system should actually know those data. Then only, I mean, because you are building your algorithms, you are building your predictions or whatnot only based on the relevant data. So first of all, that latency should be like absolutely zero. So basically there are, like, I mean, it's not absolutely zero, but like it should be in nanoseconds or microseconds depending upon the countries and exchange you are in. But that is one latency. Second latency is, like, you look at the market data and then your algorithms, right? Like you should actually, I mean, make predictions or make decisions as fast as possible. And I mean, of course, that's a technology things that you can do it. But and then second is, right, like the latency to reaching out the market. Okay, let's say you have made a decision, you have written a beautiful algorithm, and then you have a like a low latent market data you come in. How quickly are you going to reach the market? Okay, because uh, I mean, it's two ways, right? First, you have to get the market data faster, and second, you have to reach the market faster. I mean, assume you make all those beautiful smart decisions, right? Like, and then you say, okay, I'll go 1 second later, which is meaningless because by the time you make a decision, you looked at some market data, and by the time you actually delayed like 1 second, like the market would have changed. Most of the time, you'll never get an execution. That's a bigger time for market to react. So the latency is very important in terms of reaching to the market. So there are a lot of direct market access are coming in, meaning exchanges like NSE or BSE, they give you a direct access to their system. Of course, it is expensive. There is a cost to it, or there are actually brokers, right? Like, broker dealers, we call it, like, Zerodha and other things. They have established their connectivity to the markets, and then when you go via them, it reaches. So latency is very, very important, so that, like, you actually reach the market faster, you get the market data faster, and then your executions are faster. And what types of frequency trading is the next question that you have, right? There are like three types of frequency trading, like generally, right? Like high frequency trading, low frequency trading, and mid frequency trading that you can say. High frequency trading are like for investment banks, or like, for a sell side trading firm. Meaning, let's say we were a sell side trading firm, like, we had, like, multiples and multiples of orders who actually coming into us. So we are an high frequency trading desk. That means in a fraction of a second or less than a second, like, even in the microseconds, we were able to send thousands and thousands of orders. I mean, to the point, like, to give some data, right? Like, we have sent, like, 50,000 different orders in like 10 microseconds or in a millisecond. Okay, so that is huge. That is what high frequency trading is. That means we have the engine to actually look at the data and then make decisions, and then it was able to reach the market within that time. So that's truly high frequency trading, because like you are just like, instantaneous and spot. And then there is mid frequency trading and low frequency trading. It doesn't mean that, like, you can actually I mean, like, you can be like 2-3 seconds later only. I mean, like, it depends upon the algorithm that you build. Let's say your algorithm you build is, right, like, you can actually wait for a 5-minute prediction or a 4-minute prediction, right? Then, like, you're not talking about the microseconds and the nanoseconds. Okay, it's okay, because you're, I mean, you're predicting something 4 minutes ahead, right? Like, it can go a little slower. So that's what the frequency, different frequency. And mid frequencies, again, purely depends upon your algorithms, right? Like, like what decisions it makes. I hope that answers the question.
Yeah, Murthy, just meaning when you're speaking about latency, right? So then the concept of co-location comes in, right? So I think where I mean the markets let you sit as close as possible to their matching engines so that you can reach the markets faster. If you meaning if you have followed Murthy speaking about how fast you reach the market, right? There were two places at which he was talking about latency. One is getting market data, another one is making, meaning executing your decision, right? You got the market data, you made your decision, how fast you can reach the market to place your order, right? That is also very crucial, because meaning there is always a problem in implementing your decision, right? We can always make decision, but there are challenges in executing the decision at the desired pace. That is when the co-location comes in picture today. In the rapid a trading environment where people who want to do high frequency trading make use of facilities called as co-locations, right? Meaning these are co-locations, these are servers that are located very close to the matching engine of the exchanges, which lets the companies, right, or the servers that are hosted in the co-located environment speak to the exchanges much faster, meaning the round trip time to reach the market and get an acknowledgement will be much lesser than executing this from any other environment, right? So there are some meaning legal issues that companies have run into using co-locations. Even with NSE there are challenges, meaning they have preferred data access to one company compared to others. So when we spoke about latency, meaning when we speak about latency and when we speak about co-location, we have to meaning we have to read a lot of things, right? Understanding what are the problems that have come when people have started using shortcuts to reach market faster and as quickly as possible, right? So in this case I wanted to give a couple of examples, right? Meaning if you get some time, read a book called Flash Boys by Michael Lewis. Okay, I think most of you would have read this already, right? The book is Flash Boys, A Wall Street Revolution, right? And it's written by Michael Lewis, the author who has written Moneyball as well, right? That's Brad Pitt movie. So if you read this book, meaning I don't suggest this book as a as an education, but this basically gives you an idea of how high frequency trading shops work in real time, right? And what are the challenges, what are the internal meaning details that are associated in success or failure of a high frequency trading, right? This meaning don't follow this as 100%, but this definitely gives you the internals of a high frequency trading um, a shop, right? And there is a documentary called Inside Job. It's by Charles Ferguson, right? Inside Job. This briefly speaks about the 2008 crisis, right? And what was the result of 2008 crisis? And meaning it talks about what are the impact of high frequency trading or algorithmic trading. That was also one of the reasons for the 2008 market crash or crisis, right? So please read about that. And there is a flash crash that happened in May 6, 2010. Read about that. So I think in order to make yourself a better meaning better candidate to do algorithmic trading, we need to know what are the challenges that are associated, right? Because we have spoken about the needs to set up a proper algo shop, we spoke about algorithms that can be used, we spoke about meaning technology needs, but we never spoke about the risks associated, right? So we should always know what are the risks associated in using high frequency trading, meaning what are the challenges in doing something at a much higher rate, right? What are the risks associated? So meaning go through these references whenever you got some time. That would definitely benefit your learning as well.
Thank you for that detailed input, sir. As we approach our end of the session, there's an overwhelming information out there for economists. What baby steps should be taken by the ones who plan on venturing into this way of trading?
Right. I'll first go, Barney, and then you can probably add. First of all, just understand the market microstructure. I mean, that's the first thing that we would suggest, right? Without knowing actually of all the elements of markets, right? Don't jump in too quickly. And then the second thing which I would tell you, right? I think I told you at the beginning, right? When you actually jump into the market, I mean, now today, right? There are a lot of pioneers already there. So you make sure you just cut down a lot of people who are ahead of you, and then make sure that you are already in the 95th percentile, or like at the top bracket, right? Like by eliminating the manual, automated, and all the other tradings. That is number 2. 3, right? Let the data talk to you, right? Just don't make any decisions like by reading. I mean, of course you have to read and all those things, but with the advancement of machine learning, AI, like the technologies, let the data tell you what you should do. Second, third, and if the data tells you this is what is going to happen, ask the machine to actually tell you what has happened with this particular strategy, right? Do a proper back testing model, like go back historically, and then use that model to actually see this is actually works in all market conditions. And then use the technology advancements, and then just go and run rocket. It'll be you learn as you go. I mean, those are the things that I would suggest. Barney, you can add few.
Yeah, I think we are at the last minute, but still I want to talk about two things, right? Ethics, responsibility. and risk, right? So being a responsible market player, we have to be ethical about doing things, right? About our trading practices, always follow the standards, the regulations, ensure that you do the right thing, right? It is always ethics that make sure the market is a fair place for everyone, right? So we should ensure, or we should always practice ethical habits whenever we are involved in doing any algorithmic high frequency or meaning automated trading. And at the same time, please be aware of the risk associated, right? Meaning always fancy steps attract more people, but there is always risk. Whenever there is high frequency of trading happening, there is high chance of failure, right? Whenever you make money, there is a chance of losing money. So you have to be very, very careful about the risks associated, understand the risks, take calculated risk, and execute your plans accordingly, right? So those were two things I would say. Anyone who would want to do trading, not just automated, be it manual trading, automated trading, building a shop, running a show, please be aware of the risks, be ethical, and ensure that you do the right thing always.
I thank our guests, Mr. Narasimhamurthy and Mr. Bhaniyam, for joining us today and taking time to share their ocean loads of knowledge on algorithmic trading and investment. We got a great insight on how market works and various aspects of it. I'm sure this inspired a lot of young minds out here. We would like to present a virtual memento as a token of appreciation for all your efforts in helping us throughout.
Thank you so
Fantastic.
much, Varsha. Yeah, go ahead, Bernie. Sorry, I'll cover later.
No, I was about to say thank you for the opportunity. It was nice speaking to meaning the team here. I hope we made some good insights towards meaning your meaning internal fire towards trading and algorithmic trading. So feel free to reach out to us. I think we have our contact details with Varsha. If there are any questions, write to us. We'll try to help you as much as possible. Thanks
Yeah.
again.
Same thing here. Like, first of all, like Varsha, like for coordinating with us, like when all those things, and like a lot of great questions, right? Like, just like brushing our memories like back, like, in the algo trading desk. And also, as Bernie said, right, it's just like gives immense pleasure in talking in this subject in the IEEE crew. Like, it's great. And like, I'll share my LinkedIn details. Like, feel free to reach out to me anytime. Like, anyone, like, I'll share as much as details that I could, like, in whatever way. Thank you so much.
Thank you, sir. I would like to thank Mr. Changappa for your thoughtful words that inspire the youngsters out here. We would like to present a virtual memento as a token of appreciation for all your efforts in helping us through.
Changappa, sir.
Sorry, Ritvik had some bandwidth issues. I profusely thank all the organizing committee and also the SCT in Bangalore section for this gesture. Thank you.
Thank you, sir. Next up, we have an amazing quiz lined up on stocks and shares. Over to you, Chaitanya and Rashi.
Thank you, Varsha. So hello, everyone. I'm Chaitanya Manoj Turmari from the SCT events team of IEEE Bangalore section. So me, along with Rashi Shri Shukla, are going to be moderating the quiz session known as the stock market trivia. So aren't you guys excited? So what are we waiting for? Let's kickstart this session and have some fun. So, but before we start off with the game, let's take a look at the instructions quickly. The quiz competition consists of 12 questions. Each question is of MCQ type, and every question has a time limit of 20 seconds. The quiz competition is being held at the Kahoot platform, and the scores are based on the correctness, speed, and your answer streak. So why wait more? Let's dive in. So all of you guys can join the quiz by clicking on the link which is shared in the chat box. And after actually getting into the kahoot.it website, the platform asks for the game pin. So please enter the game pin, which will be provided in the chat box. So Rashi has provided the link for joining the quiz. It is www.kahoot.it. So please join the link. Please click on the link and join for the quiz. Rashi has also displayed the game pin in the chat box. So as soon as you get into the Kahoot.it website, the platform will be asking for the game pin. So please enter the game pin, which is provided in the chat box. The game pin goes like this: 5047317. So please enter it. Let's wait for a few minutes so that the participants can join in. After having entered the game pin, it actually asks for a nickname. Please provide a nickname and get into the game. We are actually expecting a active participation. Come on, guys, it is gonna be fun. Please join the game. We have around 16 participants now. We are expecting some more. Come on. Uh, the game is going to be interesting, and it's a great mode of learning to get insights about the stock market. So it will be fun and interesting. Please join it. We'll be waiting for a few more seconds, and then we are going to start off with the game. Okay, so we have 24 participants. That's awesome. Okay, so we have 25 participants now. That's great. So let's start off with the game now. Rashi will start off displaying the questions. So here it goes. Get ready, guys. The first question goes like this. So when you purchase a stock for $10 and then sell it 1 month later at $20, you are. So the options are now displayed on your screen. Please carefully choose the right answer, and you have got a time limit of 20 seconds. So the right answer is buying low and selling high, and 18 of them have got it right. So let's take a look at the scoreboard, and Ruby is in the first position with 911 points, followed by the winner and VAR, and Jai Kishan and KRS Navara. That's great going, guys. Come on, let's do this. Let's get into the next question now. So state which statement is false regarding the algorithmic trading. So the options are displayed on the screen. Please choose the right answer. Okay, the right answer is it is also known as white box trading. So the false thing about the algorithmic trading is it is white box trading. The alternate name given for the algorithmic trading is actually the black box trading. So 11 of them have got it right. So let's take a look at the scoreboard now. Oh, that's great. Jai Kishan is at the first position, followed by VAR in 1, 2, 3, 4. That's great going. Let's look into the next question now. This is the third question, and it goes like this. What are bullion rates? The options are cotton rates, gold or silver rates, share prices, or the oil prices. You've got 20 seconds. Please choose the right answer. That's great. So the correct answer is gold or silver rates, and 10 of them have got it right. Let's take a look at the scoreboard now. Okay, VAR is leading now, followed by Steve and Deepthi, then Sakshi and KRS Navada. So that's a great going, guys. That's a great try. The fourth question is, what is a stock? The options are displayed on the screen. Please choose the right answer. And the time limit for the question is 20 seconds. Okay, 21 of them have got it right. The right answer is a piece of ownership in a corporation. Let's take a look at the scoreboard. VAR is leading with 3,499 points. That's a great going, guys. Followed by Deepthi, Karis Navada, Jai Kishan. So here comes the fifth question. What professions are associated with financial markets? The options are displayed on the screen. Please choose the right answer. Okay, so all of the options listed was the right answer and 25 of them have got it right. Let's look at the scoreboard. VAR is leading, followed by Deepthi and Jai Kishan. Awesome, guys. Let's move on to the next question now. Sixth question goes like this. A holder or owner of stock in a company or corporation is called. Options are stock market, shareholder, portfolio, or industry. Please choose the right answer. Shareholder is the right answer, and 27 of them have got it right. Let's look at the scoreboard. So VAR is leading, followed by Deep and Jai Kishan. That was a great try, guys. Let's move on to the next question now. So the seventh question goes like this. What do the bear and the bull stand for? So you've got 20 seconds time and time limit, and please select the right answer from the options which are displayed on the screen. So the bear means stocks are falling and the bull means the stocks are going up. So this is the right answer and 22 of them have got it right. So let's take a look at the scoreboard. So VAR is leading again, followed by 1, 2, 3, 4 and Deepthi. That's awesome. Keep going, guys. So the question 8 goes like this. If someone tries to trade stocks with the New York Stock Exchange being in India at 10 a.m., which of the scenario is possible? So the options are displayed on the screen. Carefully choose the right answer. You've got a time limit of 20 seconds. Okay, so the right answer is he cannot trade the stocks because it's not the trading hours of the New York. So 10 of them have got this question right. So let's take a look at the scoreboard now. So Var is leading, followed by Jai Kishan and 1, 2, 3, 4. That's awesome, guys. So let's move on to the next question. So the question goes like this. What is short selling? Options are displayed on the screen. And you've got a time limit of 20 seconds. Please choose the right answer. So the right answer is borrowing stocks, selling it, and then buying it in the future to cover it. So 5 of them have got it right. So let's go on with the leaderboard and then the next question. So Var is leading, followed by Jai Kishan and 1, 2, 3, 4. So let's go to the 10th question now. So the question goes like this. Which are those events that did not lead to the downfall of the stock market? So the options are displayed on the screen. Please choose the right answer. Okay, so the right answer is Black Revolution of 1970, and 13 of them have got it right. So let's move on to the scoreboard. Var is leading, followed by 1, 2, 3, 4, and Pratik. Let's move on to the next question now. So it goes like this. Fundamental analysis is study of what? Is it stock charts? Is it bonds and treasuries? Is it company accounts and valuation? Or is it all of the above? Please choose the right answer. Okay, so company accounts and valuation was the right answer. Only 2 of them got it right. So, but it was a great try, guys. So let's look at the scoreboard now. Var is leading, followed by 1, 2, 3, 4, and Pratik. So Deepthi and Varun, they're trying hard. So keep it going, guys. Let's move to the last question. That's the 12th question. So the last and the final question goes like this. So which of the following indexes is not matched correctly? You have a time limit of 20 seconds. Please choose the right option, which is displayed in your screen. Yeah, so the right answer was JCI Japan, because actually the market index of index JCI is for Jakarta and Indonesia. So 6 of them have got it right. So let's look at the scoreboard now. So the second runner up is 1, 2, 3, 4, followed by the first runner up, which is Varun, and the winner is Var, and he's got 7,649 points. So congratulations to these winners, and thank you for everyone who have participated in the stock market trivia. So hope you had great fun and some learning regarding the stock markets. So here is Chaitanya and Rashi signing off. So over to you, Tejasvi. Thank you.
Sakshi.
Yes, a pleasant afternoon to all of you. I, Sakshi Kiran, a volunteer of the Student Coordination Team IEEE Bangalore section, welcome you all for today's panel discussion on the journey of turning novel ideas into well-established realities. I would take this opportunity to introduce all the panelists of today's discussion. Firstly, we have Ravi Kiran Annaswamy, who is the co-founder and the CEO of Numosity Technologies. He is a very passionate about clean mobility and is working towards accelerating electric mobility in India and the world market. His strategy is on using IoT, analytics, and deep learning to accelerate adoption of electric vehicles and innovate through new business models of energy as a service. He has over 25 years of experience as an entrepreneur and as a business leader at Nokia Siemens Networks and Siemens AG. He was instrumental in launching and scaling frugal and innovative solutions like mobile prepaid, data charging, and various VAS solutions in India and global markets. He championed entrepreneurship by working as an innovation head for Bangalore site of Nokia Siemens Network. He is a professional volunteer at IEEE and on the global leadership team of IEEE 5G and contributes to the vision and strategy of future applications and services. He is currently a global board member and vice president of membership and marketing for IEEE Technologies and Engineering Management Society. He was the chairman of IEEE Bangalore section and on the board of IEEE Asia Pacific during 2014 to 2017. He is a thought leader and a speaker at numerous prestigious international business conferences. He has done his MBA from Indian Institute of Management, Bangalore, and has graduated from University of Visvesvaraya College of Engineering, Bangalore. Our second panelist for today is Sumant Prabhu, a 29-year-old first-generation entrepreneur, an enthusiastic technocrat, a diplomatic orator, and a humble human being. Born and brought up in Sagar, Shimoga district, he finished his mechanical engineering degree from Jawaharlal Nehru National College of Engineering, Shimoga in 2013. During the second year of engineering, he started an initiative that now is the company he is running. He rejected the high-paying jobs and he got during his campus interview and started his own enterprise at the age of 21. Adding on to his achievements, he holds the credit of starting a company called Crew at the age of 19, which got the Best Student Startup of the Nation award by Tata. Currently, he is the co-founder and the CEO of Kidvento Education and Research Private Limited and has led his company to win Taiken 2016 award by Thai Foundation and was honored to receive the award from Infosys Chairman Mr. Narayan Murthy and Nobel Peace Laureate Mohammad Yunus. His company Kidvento is also a recipient of Elevate 2018 award from the Government of Karnataka. Sumant Prabhu is also a member of governing bodies of several technical management institutions. He is also a professional mime and mimicry artist and a stand-up comedian and has given his performances at several shows. Next on board with us is Yasha Swami, who is a cultural transformation and analytics expert with extensive exposure in leading projects for Fortune 100 across United Kingdom, US, Australia, Dubai, and China. She has represented India among emerging 25 women leaders in the Fortune Most Powerful Women Partnership Program, hosted by the US State Department in 2012 and 2017. She was awarded the Super Achiever Award by the World Women Leadership Congress Awards in 2017. She has also been featured in Biz Inc., a case study publication of IIM Bangalore and CII's bold and brilliant coffee table book on women achievers in 2018. She was awarded the Times Power Woman Award, Excellence in Entrepreneurship in 2019 and was recognized by iCreate for achieving the milestone of creating 4K entrepreneurs and 12,000 jobs among the disadvantaged women and army veterans in 2020. Yasha Swami is mentioned in the book Underrated, Undeterred, The Six Success Habits of Women in Emerging Economies by Rania Habibai Anderson as a leading Indian women entrepreneur. She was awarded the fellowship by the Institute of Directors in 2021. She is the founder of Culturelytics Private Limited, which has developed the world's first AI platform that defines and measures the culture of an organization, mapping it to an impact. She started her entrepreneur journey in 2009 by founding E2E People Practices, a respected boutique consulting firm that undertakes large business transform projects and is evolved deeply in building purposeful leadership practices across sectors. Our next panelist is one of our own, a member of the IEEE Bangalore section family, none other than Arun Tanzkali. Arun is someone who is known for his passion for harnessing technology for the greater good of the society, which currently takes the form of making society adopt electronic cash. He is currently the co-founder and the CTO of Neurix, a startup focused on micropayments. He remains an active engineer, developer, and product manager. He has worked in the telecom and IT industries for over 30 years. He was earlier the CTO of Mahindra Comviva and before that the co-founder and CTO of Jatayu Software. He and his team's products have won many awards over the years for innovation and excellence. Products designed and developed by his teams in India have reached over 100 million users globally. He is a senior member in IEEE and is the 2021 chair of IEEE TMS Bangalore. He also volunteers in Rotary and is a member of the tech team of RI District 3190. Next with us, we have another highly energetic and enthusiastic person, Raj Shri Shukla, who is the business strategy advisor, a startupper, a business turnaround specialist with over 20 years of experience in investment banking, management consulting, MSME advisory services, advising fourth IR companies. She completed her Bachelor's of Engineering in Electronics and Communication from the National Institute of Engineering, Mysuru, and is now helping tech-led startup pitch to prospective investors by helping them draft punchy and crisp pitch decks and cold emails. On behalf of SCT IEEE Bangalore section, I extend a warm welcome to all the panelists. I would like to take a minute to introduce our moderator for the session, Kiran Keshav. Kiran is a web developer at Credit B. He is the mentor for SCT, treasurer for IEEE Bangalore section Young Professionals Group, IEEE Execom member, IT chair, and web analyst for Region 10 HTC. Now, I request Kiran to take over the session. Thank you.
Welcome to all the panelists on board. So request you to please turn on your videos. So we would be starting off first with Mr. Sumant. Sumant, the first question to you would be, what basically motivated you to come up with a startup in the field of education?
Right. Hi, Ketan. So this wonderful to be on this virtual conclave, which is focusing on the entrepreneurship and to know the journey of entrepreneurs. And I mean, I was hearing the previous sessions in bits and pieces. Also, the it's about trading. Right. So what motivated me is, see, I mean, I asked this question to myself for a very long time. What exactly motivated me to start this? Right after my engineering, because I finished my engineering in 2013, and I didn't. I was placed in several top companies, but and I was, I was provided a fellowship seat in several, universities. But however, I chose to start because, I asked this question a lot, but then later I found the one reason that really motivated me is to, work on my idea. For example, like if I had, gone to any other jobs, right? I would be getting good pay and probably whatnot. But one thing that I wouldn't have got is the time and the space to, work on my ideas. So I was very clear about, me getting innovative ideas every single day. And one thing that motivated me is my desire to work on new ideas, to be able to, productively put my time into developing something which really matters to the society. So that is what actually motivated me. So I can, keep it short and simple for that.
Yeah, thank you, Suman. So my next question would be to Mr. Ravi Kiran. What inspired you to start a company with EVs?
Hey, thanks, Ketan. I'll get my video on in a minute. I'm a little bit on the move. Thanks for inviting me here. So, on the EV, see, one of the things which India and world over we are going to look towards is clean mobility in the next years. That is, everybody wants to change the pollution pattern across the cities, across the countries. So this was one interesting aspect to see how we could make an impact. But what triggered me more is that when you want to do such a big transformation in any country, you have to build systemic infrastructure, systems in place, which will allow you to do things in a faster way. I was lucky enough to be involved in what happened with telecom in the 90s and 2000. We worked on a lot of those topics, but not everything was done right. So picking up a lot of learnings from that, uh, to do the right things in EV in terms of building the right charging infrastructure, to get the right systems in place in terms of your batteries, in terms of connectivity, there's a whole lot of things to be done in the right way so that as a country we benefit in the next 10 years. So that's kind of triggered because I have an experience, I understand what it is, and we try to see how we can scale it up for the country. And now we have gone beyond India, we are working with many countries. So we realize that it's not just in India, it's very relevant in many countries. So which means as an opportunity, it's a pretty large opportunity for us to work with. And that's what pretty much triggered. And what we would like to see is in a decade, by 2030, we should be able to bring a good amount of our vehicles on road to be electric. Maybe it's on the two-wheelers and three-wheelers. If we can change the pollution pattern of India having most of the polluted cities in the world, hopefully it changes to some extent. And that would be good for each and every one of us. I think that's what motivates quite a lot. Back to you, Ketan.
Yeah, thank you, Ravi Kiran. So my next question would be to Yasha Swami. So instilling culture in people's work is the foundation of your startup idea. So this is what we came across. So out of the many ideas that were popping in your head, we would like to know how did you come in terms to shortlist one idea and make that as your startup?
Thank you for the question. Well, actually, given my background, I'm a serial entrepreneur, right? So I think this is my fourth company, and the idea came because of my past experiences. So if you look at the 20 years that I've had in the trade, it's been a combination of senior roles in the management, and I wanted to always be a front runner in incubating product companies. And I'm very happy to say that we've been recognized as the world's first artificially intelligence powered platform that not only measures culture but also gives the financial impact of the work environment on revenue projections of a business. So I think it's because of experience, the opportunity on hand, and also the India angle to say that, you know, we are capable of producing a smart product.
Thank you, Yashaswini. So I would be moving on next to Mr. Arun. So my question to you would be, what are the initiatives or incentives that you are offering in with respect to the other competing apps like Google Pay, Phone Pay to your clients?
Yep. Thanks, Kiran. Thanks for having me on this session. I will not turn on the video because I'm in a poor bandwidth area, so apologies for that. So coming to your question, first, even though we are in the payment business, our area of operation is not really India. We primarily operate in Africa, but taking the gist of your question, what do any payment company offer to customers? When there are large players like Google Pay and Phone Pay competing, I think the context. Hello, can you hear me, Kiran?
Yes, Arun.
Yeah, thank you. So an example that customers do not have with Google Pay or Phone Pay today is the ability to pay in a connection-less environment. An example of that would be trying to pay for, let's say, your bus ticket. Right? Transport is a big segment in general, and there are very few options today when you want to pay for a ticket or something a service which is being offered along the highways, and the lack of connectivity makes all existing payment systems quite fragile, right? Because they are heavily dependent upon online payment authorization and so on. So I think one big thing that we provide as a solution, both in India and elsewhere in the world, is the ability to transact when there is no connectivity. And I think that's a big differentiator, and consumers really need that kind of a solution. So that's just one example of an area that is a clear gap compared to what the big players offer today. And there are many other similar segments where more specialized solutions can be offered, and it doesn't necessarily conflict with what Google Pay or Phone Pay is offering, and can fill gaps where the consumers genuinely have a need.
Thank you, Arun. My next question would be to Raj Shri. So as a business advisor, how would you measure success?
Hello, good afternoon, everyone. I'm Raj Shri. Thank you for the invite. I'm happy to be here. My metric of success is, a company which can fulfill its triple bottom line responsibilities, that is people, profit, and planet. That is fulfilling its social, profit making, and environmental responsibilities. Would what I rate as a successful company. That goes for startups as well as established companies.
Thank you, Rajashri. So now I'll just be pitching in a question, and any of the panelists can feel free to answer to this. So my question would be, what are the key parameters that investors basically need to evaluate a startup for funding?
Ketan, can I answer that? Arun here? Can I go?
Yeah, please, Arun. Even the other panelists can feel free to answer to this.
Yeah, thanks, Ketan. So I think there are multiple parameters, but the one that I have seen and the one which I advise other startups that I interact with to particularly care about what I call the 2V, 2C. The two V-based words, validation and velocity, and the next word, conviction and commitment. So only one of these is really about the idea. This is about validation. How much of an idea had? Is this something which has been just in the fertile imagination of the founders, or has it actually faced some market experience? Right? Has it gone to the users? Has it got any feedback? Has any the contact with the market been done for this particular idea? Typically, when an idea goes to the market, it evolves, and something which hasn't had that experience would probably not be sufficiently validated. So validation of the idea. Second is velocity. How agile are the founders? Can they keep evolving the product to keep pace with feedback that they get from users? And are they able to move fast enough? Are they rigid in their ideas? That's the second aspect. The third is conviction. How much of a belief do the founders have in what their idea is? Are they passionate about it? Are they sufficiently believing in it to actually put their all behind their idea? And that brings to the last one, the commitment. How much of a stake the founders themselves have behind this? Is this something which the founders are doing as a kind of a moonlighting activity, just trying to see where it leads, or have they put their whole effort behind this particular idea? I think those two V2C model is what I think investors do look for, and only one of those is really about the idea, and the rest is really about the founders and the team. That's what I see. Thanks.
Ravi here. Maybe I'll add to what Arun talked about. So Arun nicely put it in. I want to add one more on top of this, which I've seen most investors also look at. Is remember they are investors, which means they have money and they want to invest in one of your ideas. They're using guidelines to check it. One of the things which is important is how does my money multiply? Always you should remember is whether it's an angel investor, whether it's a institutional investor, they have money and they need to get X returns in 5 to 10 years. Nowadays, it's never 10 years. It's usually people are looking at 5 to 7 years. So your the size of your market, the total addressable market, and the market you would address, the serviceable market, becomes a very important aspect for them to see, along with the velocity and traction, which Arun was talking. They tend to see and make a gauge to say, if I invest today, in 5 years, would I be able to get a 5x or a 10x return of whatever I've invested? So, which means the value of the company, the valuation of the company, not the value really, the valuation of the company should be able to go at least 5 times or 10 times from where I am today in 5 years. If I'm able to get that metrics and that confidence in that company, I think the money flows in much, much faster. I think that's one of the yardsticks they use after they check on the people, the traction and idea and everything. I think it comes down to, will I get that multiple? Will I get that valuation multiple? Because that's where they will definitely get their exit, because they have to pay their limited partners and general partners the money back, whoever has given them the money. So this is one thing for us to remember. You need to have a big pie of the market for you to address and also service. If you are able to do that, it triggers a lot of people, and your traction and others gives them the confidence that you will be able to achieve that target and they would be able to get that valuation. That's something I wanted to add.
Yeah, thank you, Arun and Mr. Ravi Kiran. If there is any other panelist who would like to pitch in a few thoughts. Okay, so I'll be moving on to the next question. The next question would be again to Mr. Sumant Prabhu. So what was the point that you were actually stressing on in order to get investors for your company? And what do you think the investors liked in your startup that was innovative?
Right. I mean, see, right from the beginning, the point that we stressed upon is the team. Uh, I hope a lot of students are listening to this, and a lot of students are who are all entrepreneurs or aspiring entrepreneurs who are listening to this. So see, investment is a very very tricky game. So you can't get investment. You can get investment when you don't need, and you cannot get investment sometimes when you actually are in need. So it's a very tricky game that we all play. So we have raised at Kidvento, we have raised till pre-series A now. Last February 2020, last February, sorry, we raised pre-series A round from investors from Qatar. So now what happens is, in both the rounds that we have raised investment, the seed and the pre-series A, the most important thing is the team that is what they saw. And me and my co-founder both from a tier 2 engineering college. We did not have any fancy degrees from any fancy top colleges, but we are from a very humble background, and that is what we stressed upon also. That we told our investors that we really are hungry about we are really determined and hungry about whatever that we are doing, and that is what attracted the investors the more. And the second most thing is our passion towards education, because me and Nikhil, my co-founder, so we both are in education sector since we are 19. So since we are 19, we are talking to the schools, we are giving conducting workshops to students. From a point where we started our workshops from 1 or 2 schools, we have grown to now 300 plus schools across India now. It is the passion, I think, that they've seen we have for education that really got us the investment. In fact, to be very honest, our first angel funding, the first round of funding was raised for a product that really did not see the light of the day. But still, those investors are still with us. They are still backing us, though the product that they invested did not, take off. It is actually the belief they have on the team and the passion that we carry every day in and day out. That's it, Ketan.
That's great, Sumant. Thank you for those. And next, I would be moving on to Mr. Ravi Kiran. So my question would be coming ahead, like in the near future, how do you think EVs will shape the Indian automotive industry?
Yeah, so if you notice now, electric vehicles are a very, very tiny percentage of the vehicles being sold in India. But when you start looking at multiple segments or various segments, you will see that it starts to make sense already in a couple of segments, where whether you're looking at the fleets, last mile delivery or last mile people movement, where you need a kind of a vehicle which can be shared, which can be at a low cost from an operational point of view. There are people are already seeing the benefits of electric vehicles. One, from the lower fuel price, and also when you look at the cost of operations, if you're running over 200 kilometers in a day, you recover your money within a year, which is pretty good for all these players. So in that segment, you will see a massive rapid adoption of electric vehicles, two-wheelers, three-wheelers, and even load-bearing four-wheelers would come up in the next 1 to 2 years. You will see a lot of expansion, which is good for India. Again, there is a challenge now that are we promoting the wrong kind of slow moving vehicles on the road? So these are other challenges we need to take care. When it comes to cars, you will see uptake of these things only by 2025 and above. So I don't think much of the things will change. That is why if you notice the scrappage policy is coming up saying after 15 years of the older car you need to scrap. That opens up a market for newer vehicles to come. But here only when the battery prices go down and we have vehicle prices matching up with the IC engine prices, you will see more uptake. Last segment, really to look at buses, the public transport and trucks. Again, the use case for buses are extremely high. You will see now many of the public transport moving towards electric buses. It's starting to happen in next 3 to 4 years. We believe public transport will start to move. It's in the intra-city, not the intercity, but the intra-city would already move towards electric very soon in the next 3 years. So those are the segments where we will see rapid change. Unfortunately, we still are not doing it very systemically. We are doing it very ad hoc as a country. So hopefully when we adopt all of them, we will see a much better transportation in the next future, rather than again having traffic jams and all kinds of traffic issues on the road. EVs will not solve it by inherently, but probably they'll reduce the amount of pollution in an urban place. But what it allows now is that all of these vehicles are connected. So there is a lot of room for intelligent traffic management and others, which was not possible with the current vehicles. So let's hope that all of this get implemented by 25 and we will see in the urban cities at least a rapid adoption of electric vehicles. Ketan, back to you.
Yeah, thank you, Mr. Ravi Kiran. we do hope by 2025 we do have more EVs in urban cities. Coming to my next question would be to Ms. Yashaswini. We have many AI-driven companies that are expanding at a quick rate. Do you feel AI is driving most of the startups in general?
Thanks, Kiran. That's a great question. I think we have to be careful here because what I'm seeing is, everybody seems to be jumping onto the bandwagon of AI. And, in some of the cases, unfortunately, it's not really artificial intelligence. I think a couple of things is helping the ecosystem now. You need huge data for you to kind of do a lot of work in deep tech and machine learning. And given the laws that India has as far as GDPR compliance and other standards go, and the population and the whole consumption ratios in India, it's probably one of the highest in the world. So these are all, trends that are supporting startups to experiment on artificial intelligence. And I think that's the way to go. However, a word of caution is that a lot of startups who actually come out and say AI, I'm seeing an increasing trend where they're not necessarily that, but that seems to be becoming a fashionable thing. Back to you, Ketan.
Yeah. Thank you, Yashaswini. Was I interrupting anybody? Okay. My next question would be to Mr. Arun. So could you please explain us a little on the Zip platform that your company is currently using?
Sure. Thanks, Ketan. So, Zip is a platform which allows someone who is not having, by someone I mean not an end user, but a company who is not having any kind of a infrastructure to set up everything on their own. Like I had mentioned earlier, a lot of the work we do is in Africa, and in many such places, there's really no infrastructure for payments. And what we do is help them get everything. Zip is a platform which allows them to give out cards like the RuPay or the Visa or MasterCard cards that you get. They can also issue Zip cards. They can also have Zip terminals which can accept payments and all the other backend processing, the switches and the payments and fees and all of that. So Zip is really a platform which issues cards, manages acceptance terminals, as well as all the payment processing. So that's what Zip is. Very briefly, thanks.
Yeah, thank you, Arun. My next question would be to Raj Shri. So how do you identify the critical risk factors in a business, and what would be your tips in order to manage these?
Hello. Yeah, Ketan, there are several critical risk factors that a startup or an established company faces. The prominent ones should be, I would say, the economic risk, financial risk, compliance risk, operational risk. There could be security risk, and maybe reputational risk. One can get around economic risk by, being very, very, by having steady cash flows, by saving as much as possible to maintain a steady cash flow, operating with a very lean budget and low overheads. And one can minimize financial risk by diversifying the customer base, keeping debt as a debt to its lowest, and creating a plan to pay off debts as soon as possible. Security risks one could get around by having security solutions in place and training the staff in security measures. Reputation risk one could manage by avoiding lawsuits and protecting product failures so as to not damage the reputation of the company. There could be some compliance risk. One should keep their eyes and ears open and comply with all the government regulations, and maybe join some business associations to keep up with the trends and changes in the compliance and government rules and regulations. That's about all. I think that should suffice, I guess. Thank you, Ketan.
Yeah, thank you, Rajeshri, for those insightful thoughts. I would next be pitching on a general question. So please feel free to unmute and ask. So my question is basically, what are the sectors that are most likely to get investors to invest? And like, is there any period of investment, as in how, what are the basic sectors that investors would prefer to invest in?
I think I feel, Ketan, there is no absolute answer for this. Because each investor, right? Each investor has their portfolios, and they have their own interest. I mean, if you look at investors like Grey Matters Capital or Uniters, they look at impact funding. So when and likewise, there are other people who look at only fintech, and I think there are many people who are sector agnostic. So it is not necessarily to say that this is one sector which is getting which is attracting investors. So I think that answer could be a little misleading for other entrepreneurs that
I think there is some network issue from Suman's side.
the point invests in everything.
We lost
Some
you for a
investors
minute,
invest
Sumant.
in whatever the topics they like. Yeah, sorry. Am I audible now?
Yeah, Sumant, you're audible now. Please do continue.
Yeah, so not every investor invests in all the sectors, and not every investors invest only in one sector. So I think the question is a bit open, and you can look at the trend in the market, and you see, focus on your ideas. Focus on your ideas. Focus on the ideas which you really are passionate about. You really can't say about investors are investing on this particular idea, so that is why I have to start something on this sector. So I think that's a wrong conception, is what I feel. Sorry, I did not really answer your question, but kind of taken it. I digressed a little bit, but I think I felt it is relevant.
Hi, yes, Sumant. Please go ahead.
Yeah. I completely agree with Sumant. I think every investor has their own interest areas, their own sectors that they are keen to invest in. And I don't think there's any specific sector that wouldn't get investment. It's entirely about the idea and is there merit in that. Having said that, I think there are some areas which are a little bit more trickier to get investment into, not specifically picking a sector, but the type of sector. Areas which are having heavy regulatory involvement, those tend to be a little less amenable to getting investment. But otherwise, I kind of second Sumant's view that I don't think there's any sector that qualifies as not being suitable for investment.
Ravi here, maybe sorry, yeah, go ahead.
Yasha Swami here, and going to what Sumant and Arun shared, I'm going to concur. My experience has been slightly different, right? So my first company, I went bootstrap. I really didn't go seeking for investment. And I think this notion that every idea needs external funding, I think that's again something that you'll need to look at. The driver is the idea, and the idea has to be founded on what is the problem that you're trying to solve, and by solving that problem, what is the comfort, ease, or value that you're creating. So let's say I'm solving a problem and people are going to pay a lot of money for that problem to be solved, right? A lot of the talk around entrepreneurship looks very glamorous, but I think any entrepreneur worth his or her salt will tell you that it's all back to basics, and the fundamentals have to be strong. So I have seen in my startups, bootstrapped. I've also raised equity from for foreign markets. And I think, while I agree there's no specific area that is trending, anything that is scalable, um, from a technology standpoint. So I think tech startups, especially in Bangalore, there are a couple of sectors which are no brainers and attracting a lot of investments into it. But the word of caution would be, for all the entrepreneurs here on the call, want to be entrepreneurs, focus on what is the problem that you're trying to solve. And by solving that problem, what can I monetize and how can I scale? Investments, I've always seen, is a byproduct of building a great idea and a great company. People who've always gone and chased investments have sometimes made mistakes of diluting too much of equity. Then you have board control and other uh, uh, clauses that come into the contract. So work on your idea, get a lot of validation on your idea, and then things will automatically flow. Back to you, Ketan.
Yeah, thank you, Yasha Swami and Arun. My next question would again be a general one. So I think most of you can answer this. Basically, what would be, or rather, what are the different ways in which a startup can give back to its investors?
Maybe Ravi here, I'll get started with this question. Ketan, I don't know what you're looking for. See, if I'm an investor in the company, one of the main things which I would look for is for financial return. One of them, I'm not saying that's the only one. One of the main things why I've invested in a particular company is I need to get my financial returns. So as a startup, the main thing they would first look for is the financial return. Then, of course, the success you have done, the impact you have done. It again depends on the kind of investor you have on board, if they're impact investors or financial investors. The targets and goals for each one of them are different. But in all probability, they're all looking for a financial return. I think if you can get that fundamentals right, most investors would really love it. On top of it, if you've made a huge impact, they will stay on with you for a longer time because they know the value of what you're creating is much bigger than just making an exit with a financial gain. But nevertheless, majority of them would be looking for a financial return, which is why they are in there for the first place.
Yes, thank you, Ravi Kiran. So if there is anybody else who would want to add in your thoughts.
Sumant here, Ketan. See, any
Yes,
investor
Sumant,
would
please.
invest in a sector, as Ravi rightly pointed out. It is first is the financial aid. I mean, why would I, why would I put my hard-earned money somewhere for anything else? It is to multiply my wealth, right? So it is for the first is the financial health. However, there are other factors that are, it also is, I have seen a lot of investors, especially the investors who have invested in my company at least, are too passionate about the sector that I'm working in. So these are the investors, who are ready to, look beyond finance, where they actually share the passion, they share the commitment, and they want to wait till, till the right product comes out, and till we see a, kind of success that really matters to the world. These are the investors who, really join hands with you and walk along with you. And so that is, I mean, point comes to how do you choose the investor. It is not about, investors I think, we have talked a lot about investors choosing the companies to fund, uh, but we also have to really focus on what kind of investors as founders we choose. That also plays a huge role. You can't be, sorry. Yeah, you can't be, and it's like getting married, right? You can't just, uh, get a wrong person in your hand. So it's not that way. So you got to be focused on how to choose investors also. So That is why we be very careful when you're talking to investors, whether they're only talking about finance, or they're talking about the impact, or they're talking about the vision for next 5 years or 10 years, or are they talking about? I mean, I have seen investors who talk about, yes, I put so many $1 million of funds, and how fast I can get an exit by selling this company. I mean, there are certain terms that you really need to catch with the investors also. So it's all about how do you choose investors. So investors, financial return is the foremost thing that the investors look at. The rest of the things you really need to observe from the investors.
Thank you, Suman. If there are any other panelists who would want to add in your thoughts, if not, I'll be moving on to the next question. Yeah. So moving on to the next question, it would be for Mr. Sumant. Yeah, so as we all know, during this pandemic, there has been a transformation in teaching, especially these days when we are following this hybrid mode, which is now the new normal. So what new market trends has this, brought about in the education-oriented businesses, and what all effects has it had on your company?
Hey, thanks for a specific question, Ketan, on our sector. I mean, this pandemic was not expected, and it has resulted. It has affected in so many ways. See, as education, see, I see. When this all the corona fear is gone, and everything is back to normal, I think the schools will be back to normal, its own position. Because I work with more than 300, 400 schools now, and I see all the schools are dying back to get back to their offline classes. Not just schools and the students and parents, everybody are like, no, we are sick and tired of this online engagement. We want to be engaged offline. So I see a huge trend where schools, I know sometimes I was getting thought that will the schools be replaced in near future, like in a decade or 2 decade. But I am now a strong believer that schools will never be replaced. It is just the mode of learning will be replaced. So I think one big change that has happened in the market, in the education market, is I always say this, that even if Indian government has invested tens of thousands of crores to bring in internet awareness for next 10 years, it the government could not have achieved what Corona has achieved in last 1 year. So much of internet awareness has been brought in the country, that everybody is using online and on online learning apps, or it could be going to YouTube and searching a video, and that itself is an internet awareness. So a huge growing trend is parents and students are now accustomed with learning online, at least in gigs, if not complete syllabus, but at least in gigs, students are learning online. So this is one thing. What effect it has on our company is, see, we were mostly an offline company till 2020, and we had plans to come online in 2022. But the moment the pandemic happened and the kind of online adaptation started, we came up with our online product. And now we are building one of India's first of its kind a skilling platform for kids, with a very niche areas of skilling, and that is under development. And also we are looking to raise funds, and a lot of things are happening. I think pandemic has affected our cash flows. However, it has given an opportunity for us to go beyond offline, and do something which online, which is now scalable and also global. Thanks, Ketan. Back to you.
Thanks, Sumant. That was great to know that your company is coming up with a new product post-pandemic. So moving on, my next question would be to Mr. Ravi Kiran. As we all know, Tesla's entry into Indian market. So basically, with the onset of Tesla's entry, do you think it's a boon or a bane to our domestic EV startups?
See, there is a lot of hype around Tesla in the last months. We all love Tesla. Everybody loves Tesla because of what they've done in the US and their stock market valuations. But let's remember one thing. India is not will not be the largest Tesla market to start with. We are 85% two-wheeler, three-wheeler market even now. Yeah, the bulk of work happening in India is India's own technology, India's own adoption of what we want to do. I think from an excitement point of view, from a market signal that we are getting mature, that Tesla is coming into market, all of that is a good news. But I think we should not read too much into it. Tesla will assemble, manufacture probably some of the high-end cars, and that segment is going to be a small segment in India as in many other countries. India still 80-85% of the vehicles will be two-wheelers and three-wheelers, and we need our own innovations for it. Tesla doesn't have solutions for us. We need to find our solutions. We need innovators. We need people locally here to make an impact. So though we take some inspiration that Tesla coming in means that our market is coming up to shape, but I think we should not read too much into it. It will create some employment opportunity, some high-end cars for rich people to buy, but it's not going to make a huge impact on anything in India. So we should let our domestic players to innovate, come out with the products which will be relevant for our market, and which Tesla is never going to do, at least in the short term. So I would really encourage that we as entrepreneurs, innovators, researchers, and companies working in India, we need to keep our heads down and focus on making an impact with what we can do in our country with our problems. Not worry too much about Tesla. Tesla is a positive news, but that's where it ends. Yeah, Ketan, back to you.
Thank you, Mr. Ravi Kiran. My next question would be to Yasha Swami. So how self-assured were you during the inception of your idea, and like what was your thoughts of it being turned into a business model?
Thanks, Kiran, for the question. Maybe you're talking about my first business. I started my first business about 12 years ago. And when I started that, I don't think entrepreneurship for me has happened by chance. I don't think I had a very great plan, etc. And a lot of my ideas were innovative. I was getting great feedback from a couple of my friends and very senior leaders in the industry. So they encouraged me to start a company, and I've not looked back. So for me, entrepreneurship has happened more by chance, and I think all entrepreneurs here would agree that the journey teaches you a lot. You commit a lot of mistakes, you learn from them, you keep improving. And I think the confidence has come in a couple of areas for me in the last 12 years. One is the whole aspect of finance. And not necessarily accounting and taxes, but the whole finance management. How do you scale companies? How do you protect valuation? I think I've become more comfortable in those areas, and also the ability to negotiate, I think, is a key skill, irrespective of that, because we're handling multiple stakeholders, from your employees to investors to government bodies, and I think that's a skill that I've picked up over these years. Ketan, back to you.
Thank you, Yashaswini. My next question would be to Mr. Arun. So in the current trend, we notice a few companies that are leading the digital payment revolution. Like, how do Indian companies and startups, what strategies do they follow in order to bridge this gap?
Thanks, Ketan. Now, if I may, let me answer this in a slightly more broader sense than a specific company. I think this is a more industry-wide trend, and so let me approach it from that perspective. First, all the digital payments themselves, even though there are a few big players, it's tough to call them an oligopoly or monopoly in any sense, because together, collectively, all of them put together hardly account for about 10% of transactions, right? 90% is still cash. So I think everybody is still competing with cash, not so much with each other. So I think there's a very long way to go for that. But looking even within the digital payment space, we need to see it in a more historical lens, I would say. If you think back maybe 4 or 5 years ago, I'm not sure if you were using digital payments at that time, but Paytm was the single largest wallet, and they had pretty much like a 90% market share. Now, the way to overcome such single large monopolistic presence is via things like standardization, and that's the direction which the country is heading. UPI allowed more companies to come in, so Google Pay wasn't possible without UPI coming in. Phone Pay, it came completely to UPI, and everybody else is there because of standardization. So that towards where people come and participate. There's some sense of regulation. Today, there is a mandate that no single player can actually exceed 30% market share. That's a government which automatically limits the presence of anyone, whether Google Pay or Phone Pay or anybody else, to under 30%. Now, a more interesting question there is whether it is through Google Pay or Phone Pay, is UPI itself becoming a monopoly, right? In conflict with everything else that existed in the past, is that becoming too large to fail? So the government actually has taken steps already towards that. There's something called NUE, the new umbrella entity. It's a very sad name, but it's a competitor to UPI that's just getting created. So there are going to be maybe one or two competitors to UPI itself, and then this will further make it a uniform field where a lot more players can come in and participate. A lot more innovative solutions which can come in. So if you, summary, if you look back a little bit, the cash as a single largest one has sort of started getting chipped away at, and we now have digital payments. That was a single large player. Standardization got rid of that. Now there are multiple standards coming in, so that's going to bring in more fragmentation, and hence there's a lot more competition, a lot more innovation that's going to happen. So broadly, standardization and this thing called unbundling, where the front end, like Google Pay, is disconnected from the back end, which is a bank. So you can connect your bank account to any player and so on. That's the unbundling part of it. And third is user experience. That's pushing for a better user experience, whether it's in the form of ease of use, in terms of better security and trust that the system provides, better support and ability to resolve issues that they provide, and also finally the economics of the payment system itself. How much they charge, can it remain free perpetually, and so on. So I think there's plenty of activity happening in that. That there's a very little chance that there's going to be a oligopoly, or and definitely not a monopoly in this space. Back to you, Kiran.
Thank you, Arun. So moving on, my next question would be to Raj Shri. As we have a lot of, many business advisors, like many aspiring business advisors in the crowd today. So could you please tell us what would be a few skills that is a definite for any aspiring business advisor?
Hello. Yeah, well, Ketan, I think problem is solving skills I would rate the highest. Besides that, analytical skills, networking skills, strategic planning skills, and creative thinking skills are the most important for any business strategy advisor. These have worked for me, and since I have been a networking maven, I could get a lot of assignments when I started my consultancy practice 12 years back. Although I've been consulting from my first job, I started moonlighting as a startup advisor way back in 2000, advising some tech-led startups from IITs. That's about it. Thank you, Ketan.
Yeah, thank you, Rajeshri. My next question again would be a general one. That is, any of the panelists can feel free to add in your thoughts. So, what basically makes a good pitch, and what would be the top three, things that investors would look for in a pitch?
Okay, Ravi here. Maybe I go first. So when I look at any pitch, See, one important aspect, at least, which I look at and also I try to present whenever I do, is to really bring to everybody's attention what is the problem I'm trying to solve and how big is that problem, why is it important. If I can build a story, build a convincing story about the problem itself, I think that's a starting point. Once you talk about the problem, why is it important and why would somebody need a solution for it, and the size of this market, how many people would need it, I think that's the first good starting point in a pitch. After that, the next convincing thing would be the team. Why you? Why are you the people who have to solve that problem? And what credentials you bring in, what solutions you bring in, or what thinking you have in terms of how would you be the right people to solve that problem? That will be the second one. The team, you, founders, all of them put together. The third aspect I would look at is the actionable plan and the traction what they have. In terms of initial traction, validations with the customers, feedback what they have received, and also the GTM or the action plan to really say, would they be able to take it to the next stage? Again, it depends on what stage you are doing the pitch. In early stages, it is more to do with problem and the team. In the later stages, once you are starting to scale up, it's a mix of problem founders and team. At the same time, you'll have to then give a very clear go-to-market and a growth plan. Uh, at any point of time, whenever you are doing a pitch, if you can keep it simple, usually the KISS principle, keep it as simple as possible so that people who hear you out understand what you're talking. And if you can do it with real passion, I think it makes a wonderful pitch. One last thing is, in terms of a lot of people do it with slides. Usually I have a guideline of nothing more than 12 slides, 10 being very optimum, 8 being really, really something which I try to do. If you can talk about everything in very simple storyline, in few slides, I think that's a guideline for doing it in slides. And the last thing about pitching is also a lot of people talk about elevator pitching. You should be able to explain what you're doing in 30 seconds to anybody. And one of my friends always uses a guideline saying, if you can explain it to your grandparents, you've got it right. I mean, that's just a checklist to say, have you kept it very, very simple without any jargons? These are some of my thoughts and experiences with pitching.
Yasha Swami here, if I may come in. For me, I'd always concur with what he said, keep it simple. For me, it's three different things, right? First is, what is the problem you're solving? How are you solving the problem? And why should the problem be solved? I think pretty much this covers the whole pitching scenario, because the more clearer you are in your head, the better chances of you getting investments. What they're looking at from an investment standpoint is your ability to kind of have clarity on your own idea. And the risk that a lot of people run into long presentations is that the message you're sending to your potential investor is that I may not be very clear in my own head. In other words, I'm not really confident about my own idea. So why should you be confident in my idea? So I would again go back to these three things, right? What is the problem? How are you solving it? Why are you solving it? Also, the other thing I would recommend is to be aware of your competition. Almost all the entrepreneurs do feel that our idea is innovative. There is nobody out there in the market doing what we're doing. Yeah, and that's okay, but sometimes that's a lazy answer too. So a lot of preparedness, a lot of homework, and being genuine and sincere in your efforts, I've seen always yields results. A slight consideration that entrepreneurs can keep in their mind is, if they're working on startups that are IP heavy, then a lot of protection around how will you protect your IP when you scale your company, that also will need to be considered. Back to you, Ketan.
Yeah, thanks to both Mr. Ravi Kiran and Ms. Yasha Swami. Yeah, Mr. Arun, if you would like to add in.
I think the Ravi and Yashaswini have done given excellent answer there. All I would like to add is that in some specific cases, where the it's a specialized domains. Try and keep as little jargon as possible. The investors are not necessarily specialists in your area. They may not understand your domain very well, and hence, trying to explain it in a language like Ravi said, in a way that can be explained to a grandmother. I think that's probably the right approach. So avoid jargon and try not to use too much of your own specific domain, language in explaining the problem. I think that's about what I'd like to add here.
Yeah. Thank you, Mr. Arun. If there is anybody else who would want to add in. Okay, I'll be moving on to my next question. So we did hear to a few success stories from great CEOs and founders. So something that we wouldn't prefer wanting to know, but as an aspiring entrepreneur, I think there are a few mistakes or like the mistakes that people would commit. So the next question going on in that line would be, why do you think most of the startups fail, and what are the common mistakes that they make?
Yeah, Ketan, I'll take this.
Yes, please. Yes.
See, why do you think the most startups fail? Because they choose to fail. So that is the first answer. Because I think all the panelists here who are entrepreneurs will agree that failure will be part of every day. Every day for example, I wake up and I see that I got some deals today, and next day I wake up and I see that I lost some deals today. So what would you consider as failure and what would you consider as success? So failure is a part of every day for an entrepreneur. Now, whether I consider that one large failure, in fact, which affects my cash flow, which affects my way of doing the business, is the end of the road. So that is the choice that we make, that we call our business as failure. So why do startups fail? Most startups, at least considered to be failed, is because they stop giving the effort. I have been running I have been running my startup since 7 years now. I have had millions of chances where I could call it a quit and go, but you need to stick on. You need to really stick on, and you need to have the patience. You need to have the perseverance. You need to really believe in yourself. And it is not just one product that makes the company. If one product fails, you can always bring in another product, a better version of it. So, but most entrepreneurs, especially the young entrepreneurs, think that a product failure is the company's failure, which is very, very wrong. A product failure cannot be a company's failure. Most importantly, a company's failure cannot be the person failure also. So it is majorly because we don't see it through patience. What I've realized, what I've understood, and what I acknowledge is patience is the most important virtue an entrepreneur must have. We talk about aggressiveness, we talk about velocity, we talk about scalability, but we also have to talk about patience, because that is the most important virtue. If somebody is patient enough and hangs on there, definitely that will see the success one day or the other. And also, that doesn't mean that we should be blind enough to see that our product are not working and it's right time to move out. I'm not saying that, but you really need to genuinely feel that, rather than making a decision in hurry. That's it, Ketan. Thank you.
Thank you, Suman.
Ravi here. Can I add one line?
Yes, please, Ravi. Please go on.
So I go with what Sumant was saying, but I want to add just one additional line. There is nothing called failure. See, at any point of time, the actual time for that idea has not come. That's how I see it. You can work on any problem you want to solve, any solution you have. If it did not work at that point of time, it is just a matter of timing, because the same solution would work some other time in future. And then you as an entrepreneur will sit back and say, wow, my idea works now. So I think there's nothing called failure. It is just a decision that you need to take to see you want to stop working on it now or not stop working on it. I think that is something which all entrepreneurs need to remember. And I think Sumant also very nicely mentioned that an ideas are not coming to the time at that time doesn't mean that you are a failure, doesn't mean a company is a failure. It is just that the time is not, at that point of time, it is not fitting into the market. but the same idea will fit in some other time. I've had personally many experiences like this. So I think we should never call it a failure. It's just the timing is not right at that point of time. Ketan, back to you.
Huh. Yeah, thank you, Ravi Kiran. So my next question would be to Raj Shri. So how would you determine the cause of low productivity of a business?
Hello. Yeah, Ketan. I speak from my experience. The reasons for the causes for low productivity have been, to my knowledge, been workplace stress, work culture, deficiencies, inadequacies, and a lack of proper training of the workforce. Sometimes it has been, toxic work culture of a business, and sometimes, even a wrong hierarchical structure of a company has been the reason for low productivity. Yeah. Hello.
Yeah. Thank you, Raj Shri. So my next question would be to Mr. Arun. So as you told us that your company is mainly operating in Africa. So like we do have many startups, that are have their client base mostly in Africa, like .go, which is working on RCS. Like I would like to know, or as in, how was your journey? As in, how did you think of Africa as a client base, and how, like, what is the reason, like, you thought of having Africa as as your client base?
Thanks, Ketan. So I have been working as part of my previous roles. I've been traveling to Africa and doing business in Africa for quite some time, for close to about 15, 17 years or so. So I'm reasonably familiar with the environment and ecosystem there. And we could see a clear gap in the area that we are operating in payments. And compared to markets like India and other Southeast Asian countries, let's say about 6, 7 years ago, we could see that the gap was much larger and probably going to persist for a much longer period of time. So we felt that the product that we are going to build is going to be much more necessary, and hence will have greater adoption in Africa compared to India. So that's the primary reason we went there. And we do have a reasonable amount of familiarity. Africa is a large continent, right? It's got about 50 plus countries. So we had familiarity with almost some 20, 25 countries. So that was a good base to begin with. We have plenty of contacts in that local market and so on. So Africa made perfect sense for the idea, as well as our familiarity with the market made it easy to make an entry there.
Yeah, thank you, Arun. My next question would be to Mr. Ravi Kiran. So both your companies, in a way, are helping humanity. So do you think it is a way of giving back to the society? And if yes, so where does this desire to give back to the society come from?
Thanks, Ketan. I would not classify what we are doing right now in a big way that we are making any impact or a difference to humanity in a way. It's a regular business which we are running from a business intentions. However, I did spend 2 years way back in 2014 while I was running a center called Deccan Center for Innovation and Design, where I did a lot of work on the social entrepreneurship, where it was really to go and solve problems which can impact people in a very big way. We did a lot of work in water conservation, making water affordable, elevating people out, getting people out of granite quarries and start doing organic farming to get children to school. Many different problems which were solved way back in 2014. At that time, I could see the impact I could make on solving some of the bigger problems. But at the grassroots, we realized that you need somebody on the ground. You as an entrepreneur are not the only one, because social entrepreneurship is also about bringing a lot more people involved in whatever you're doing, because the impact has to happen at a grassroots. So it's a movement than a company. That was a big learning out of that exercise and experience I had as running a center for social entrepreneurship. But I wouldn't compare that experience with what we do now. Here we are a lot more commercial in terms of what we are doing. Yes, of course, it has some impact on India and environment and clean mobility, but definitely the social entrepreneurship, what I worked on, had much major impact on making a difference to people. I really cherish what we did there and look forward to doing it in future.
Thank you, Ravi Kiran. So we are currently running short of time. So I'll be concluding with one general question and request all to put in a few thoughts. So we do have a lot of aspiring entrepreneurs who are on board with us today to attend this panel discussion. So a piece of advice from each of you as to what they should be like working on, or what is basically your advice to these aspiring entrepreneurs?
Yes. One thing, see, first thing is start. And don't try to imagine your idea. Don't try to put it on the paper. Just don't background it. Just start off with it. So, and also please understand, entrepreneurship is a long shot. Don't try to set a stipulated time and say that if I don't see any tangible results out in this time, I'm going to quit. So not that. I mean, it's a long shot. Try to understand that it's a long shot, and really put your heart to it. Don't think too much. Just enjoy the process. Enjoy the process of building. Don't go for don't follow these newses that come in the web news applications or newspapers or news channels about investment, funding, and everything, because funding is not raising funding is not the ultimate goal of the company. Really not. So be aware of the realistic situations of the market and enjoy the process. So that is where it has to all begin. Thank you.
Thank you, Sumant.
Yeah, Ravi here. Let me add just one line to what Sumant was saying. He wonderfully put it. See, as an entrepreneur, you also need to be self-aware of why are you doing this. So each person has his own intentions, has his own goals. The more self-aware you are of that goal, your journey is going to be wonderful. Because if your goal or intention is to get more money, be upfront about it. The path you take will be different. The decisions you take will be different. The end game is very different. If you're trying to make a social impact or a big impact, the game you play, the way you take your path is very different. If you're trying to be just moving or running away from your corporate world, if you're trying to not have a boss, a lot of people put that as a reason for being an entrepreneur. The goal is very different. The more you're self-aware of yourself, what you want to achieve out of it, then you are actually more effective, and also you are in for a longer game or a shorter game based on what your actual end result is. So just be aware of it. Do it with knowing why you are doing it. Otherwise, it's a very painful journey if you don't know why you're doing it, because each person has his own goal. You cannot be now running behind money because somebody else got money or somebody else got funding. You need to be really clear why you're doing it. I mean, that's my always a piece of advice, that just be aware, self-aware of why you're doing
it. Ketan, if I may.
Yeah, please, Arun. And thank you, Ravi.
Yeah, no, I echo what Sumant and Ravi has mentioned. I think entrepreneurship is the greatest tool that anybody has to transform their life. And I think it's something which they should evaluate very seriously as a potential career path. Look beyond the conventional placement stream and consider going down the entrepreneurship. It is not going to be easy, but when it works, or in many cases, even if it doesn't, it's going to be a really transformative experience. You will be a much better person at the end of that compared to where you began. So do evaluate that option seriously and take the plunge if you feel that works for you. Ketan, with your permission, I'll just take 30 seconds more to give you a little extra information on a program that is running, which is directly relevant to this this theme. Is that okay?
Yes, please, Arun. If you wish, you could also share your slide as well, if there are any.
No, I won't share a slide, but I'll send a link to you. If you can share it with everybody else, that will be great. So TEMS is is actually running a program right now called the Young Engineers Entrepreneurship Program. It's intended to help engineering students in the third and final year who have brilliant ideas and who want to transform that into a startup or embark on an entrepreneurship journey with their ideas. This is intended directly to support those activities or those aspirations. So this has just been launched. There is a link which Kiran should be sharing on the chat with everybody else. Do have a look at that. This is intended for colleges to register and sign up. And once those colleges register, students from those colleges can participate. So if you're a student, please do talk to your colleges about registering for this program. And if you're from the faculty, please do consider signing up your college for this. This is a 6-month-long program intended to support aspiring student entrepreneurs and support them through the entire journey. Thanks, Ketan.
Hi,
Thank you,
Yasha
Arun.
Swami
And
here.
hi, yeah, Shishini, please go ahead.
Yeah, so just my 2 bits would be I'd echo with what Suman said. The time is now. Anybody and everybody who wants to become an entrepreneur, I think the policies, just the environment, social acceptance around somebody saying, I'm not going to go and join a corporate, but I'm going to start my own business. I think all that is working in the favor. And my only 2 pieces of advice would be start now. There's no better time. It is a transformative experience. You're going to learn a lot about a lot of things. And if you don't get the results that you were hoping for, you can always get back to a job. That is always an option. But do try to innovate and do try to create jobs. Entrepreneurship is about a responsibility and not necessarily you want to run away from the corporate world and so on and so forth. But I think the environment is so wonderfully stitched together right now, especially for college graduates. The time is now, and I would encourage all of you to just jump in and give it a try. Back to you, Ketan.
Yeah, thank you, Shishini. And as Mr. Varun has put the link on the chat group as well, I would request the team to send it across to all other groups. So, Rajshri, if you want to add in,
Just
yeah, please go.
my 2 cents, what I think is, if you can, with your product or service, give an amazing customer experience, everything else falls in place. Thank you, Ketan.
Yeah.
Thank you.
Thank you, thank you, Rajshri. So we will be closing in on the panel discussion. Firstly, thanks to all the panelists for taking the time out of your day to be a part of this event. I'm sure the participants have gained a lot of knowledge, and you have definitely inspired them to take up entrepreneurship as their mainstream and come up with good ideas in the near future. So I would request the panelists to switch on your videos for a small group photo, and also the SCT leads and the chairs and co-chairs. If you could just switch on your video, we could have a quick photo session, and we'll go ahead with the next part. Yeah, I think we've covered in most. If there's anybody left out, please switch on your video soon. Okay. Yeah. So moving on, we have a small play presentation by Risha. So Risha, please go ahead and share your slides. Yeah, thank you, Rajashri, for joining in. Thank you, Yasha Swami, once again for joining in and inspiring our participants. Thank you, Mr. Arun, for your for sharing your journey with us and for inspiring the attendees. Yeah, thanks again to Mr. Ravi Kiran. So as Sir has also explained his company and told us the future of EV in India, I think most of you have had a good insight about his company and the work that they have been doing. Yes, thanks again to Mr. Sumant. Yeah, definitely education is a sector that we are all involved directly or indirectly. So we had some great valuable information coming in from Mr. Sumant. Thanks again for joining in. Thanks to all participants. So I would just pass on the podium to Varun, who will be taking ahead from here. Thank you. Over to you, Varun.
Thank you, Ketan. I hope I'm audible. Can anyone confirm whether I'm audible?
Yeah, Varun, you're audible. Please go.
Thank you. Thank you. Now we'll be moving on to the next session, the FinTech Talk. A very good evening once again to everyone. I am Varun Srinivas, extending a warm welcome to each and every one of you to the FinTech Talk by Mr. Rahul Papali, Director, Bart Ventures Private Limited and a strategic consultant. Jeff Bezos once said, one of the huge mistakes people make is they try to force an interest on themselves. You don't choose your passion chooses you. We have such a delightful person with us. Mr. Rahul Papali is an undergrad in computer applications from the Christ College, Bangalore. He started working as a test engineer at Infosys from 2004 to 2008 at various places such as Mysore, Pune, and Bangalore. In 2008, he quit and started the ARK Event Management Private Limited. The ARK Event Management is a premier event management company that has handled almost the most of the EDM concerts in Bangalore from 2012 to 2014. ARK also handled the entire national operations of the Champions Tennis League in 2014. In 2009, he started the White Tiger Lounge and Bar, the first of its kind in Kalyan Nagar. It was a massive expanse of nearly 5,000 square feet and was the only pub in around 5-kilometer radius. Sir earned his Masters of Business Administration from the Hult International Business School. He went on to bring most of the international top DJs to Bangalore. Currently working strategically in e-commerce, Sir also runs an adventure sports business and is a director in the real estate holding firm. I consider it a privilege and indeed an honor in welcoming you, sir. I request Sir to take over.
Yeah, hi, call me Rahul. So would be something I guess the Queen only can give me, but yeah, no, not yet got there. Thanks a lot, Varun, for those kind words. So lovely to be connected to a lot of potential young entrepreneurs and engineering graduates. We are in a very promising time. Where we are in the world currently is a point where maybe 100 years ago was something that we'd seen. 100 years ago, just after the Black Plague, there was a massive hit in terms of business, in terms of way life had been previously. And it was a time that people had to totally change how they approached everything. And this was the point where the Renaissance period began. Of course, it also was the point of time when there was a massive depression that began, which took about 8 years. We are at a point in time now where we could be in the middle of a depression, which is a recession that lasts even longer. But as a opportunity and land of opportunity, this is the time where we can actually change how things happen for the future. right? Because now everyone has totally changed how they operate. Digital has become norm. Everything has gone digital. Who would imagine doing a session like this a year ago? A year ago, a session like this would have been unthinkable. And now this has become norm. And even companies, old monolithical companies, have had to adopt this and take it forward, right? So I personally feel entrepreneurship has been made out to seem such a big deal. But actually, if you look at it, entrepreneurship has been around since like 17,000 BC, right? Basically, entrepreneurship is the process of setting up a business, and a business is just a trade of a product or service. So as soon as there was a person trading something for something, the barter system was the first business, right? And now we had entrepreneurs throughout history until the whole industrial age began. Industrial age began and people moved into jobs, and hence to supply people for the factories and the industrial age, they had to create an education system which fed the factories, and that is how schools and colleges and everything began. Primarily before that, the main schools and colleges would have been the gurukuls and say the various ashrams and the dojos that trained people. I don't know how much more schooling was there, not something that I'm very aware of. But interesting to see that we are going back to self-employment, we're going back to gig economy, we're going back to entrepreneurship. And I feel that youngsters these days should take this opportunity and grab this chance to become entrepreneurs, to take uh, opportunities that are there out there in terms of finance, in terms of technology, and primarily find a need. That is all one needs to do. Figure out what need I can fill. If I can find a gap in terms of a need that I personally have seen a few people facing, that can be the beginning. Then I can take that from there, do some research, and understand what could be the feasibility if I were to do this on a larger scale, right? So I will get into the fintech and talking about neo banking. Before that, I'll just quickly take you through what are the possibilities. I mean, as engineers, there are huge possibilities, and I will maybe share a video towards the end. But let me just share this PowerPoint. So I hope you all can see this.
Yes, sir.
So currently, we are in a world where things have changed drastically, and we are all communicating very, very different ways. The old timers, like my great grandfather, my grandfather would be like, write me. Then later, people were like, pick up the telephone and call me. Then after that, people were email, and possibly in my time, it was okay, text or WhatsApp me. But now, the future generation is thinking of FaceTime and video, right? So this is the kind of demographic of people that we are communicating with across various generations. If you look at where have the billionaires of the world come from, if you're looking as an entrepreneur, you're looking at making a lot of money, these are the areas that you could look at. Engineering has actually created 4% of the world's billionaires. Dyson, the gentleman who created the Dyson vacuum, was an engineer who created a vacuum without the bag, and has gone on to create $1 billion company, right? Banking and finance has created one the largest number of billionaires. That is about 15% of the billionaires. So 15 out of 100 billionaires are from the banking and finance. And you can see the numbers of the others. These are problems that you could look at solving if you want to be a billionaire, right? You could look at solving the problem of the weight loss pill with no side effects. Everyone's looking at how do you become healthy, lose weight without having to go to the gym and spend hours in a gym. If you can solve that in a scalable way with no side effects, you have a chance of tapping into this huge industry, which is over $100 billion industry. Looking at a replacement for packaging, plastic replacement, there are like 15 million straws that are used across the world. This is a $200 billion industry in terms of packaging. right? Looking for a replacement that again is sustainable and can scale across the world can be a huge potential. Bioprinting and organ printing, because we're looking at living longer lives. We want to lead healthier lives, and 3D printing will reach a point where it reaches into printing of organs and enabling us to lead a much longer life. This is again a huge industry. Water scarcity is something that would typically shock us because 70% of the world is covered in water, but actually only 3% of that is drinkable, potable, right? And of that 3%, two-thirds is in the glaciers. So we have very limited access to potable drinking water. And this is something that we are already seeing scarcity of, right? In Cape Town last year, we had a point where they ran out of water, and this is going to be something that has been touted as could be the reason for the next world war. AI, everyone knows how big it is, and it's a huge area. Energy storage, because we're all looking at sustainable ways of generating energy, but how do you store this energy that you're generating from, whether it's the sun, you're looking at water, you're looking at wind? Storing of this in a viable manner can be a huge area. All of this sustainable energy being stored for long-term usage in a cheaper and more organic way can be a huge industry and area. Food production and alternatives. Currently, the kind of space required, finance required, cost required to produce food on a large scale is very high, right? We cannot sustain this as because population is just growing, and we need to look at optimizing this, reducing the amount of space required, reducing the kind of quantity of resources required to produce food, right? And then you have the large space of digital military tech. Defense spending has always been huge, and this is something that now countries are spending a lot of money on digital. And this could be an area where gamers could possibly see a huge requirement in the future because of the amount of drones and simulation that is being used. Gamers could become highly poachable or highly in demand uh, set of people because of their ability to deal with that kind of tech and have those skills to perform at high level and high pressure situations, right? Internet for everybody is going to be huge. Currently, about 51% of the world has access to internet, but there's still so much potential. I mean, another 49 need to be reached. The 51% does about $1 trillion of business through providing just internet to these people, right? Data security and profile data, privacy of data is something that we are slowly getting more and more aware of. People are the whole WhatsApp change of in terms of what data were you sharing made such a big hue and cry that people started then thinking of Signal and Telegram. And this is an area that is going to become that much more important, especially also with fintech and finance and all that, because everything is online, and if our data is lost, it can lead to massive financial effects. Space exploration, like what Elon Musk is doing, is something again that is going to be a huge area. And then you have hair regeneration, and a cure for hangover is still something that is in demand. I covered this about what entrepreneurship is and how it started. This is a few stats about entrepreneurship, that most billionaires are self-made, right? And most of the entrepreneurs are self-employed. They're working on their own. Very few employ people. And the number one reason that businesses fail is because they are not answering a need in the market, right? The larger portion of small businesses are between the ages of 40 and 60, possibly maybe because they end up leaving corporate at that point in time and deciding to then start on their own. Possibly this could be something that India changes. This is a interesting stat to talk about people who've been in the industry for a while. This is again a huge potential because most employees, the world is changing so fast, right? What change we saw between 1900 and 2000 was a 100 years change. That 100-year change we've seen between 2000 and 2016. Again, another 100 years change. What I mean is the change that one would have seen if you lived from 1900 to 2000 would have been the change that we've seen from 2016 to 2022. And the world is changing faster and faster, right? And hence, as employees, as individuals, we are having to reskill and upgrade our knowledge and keep getting certifications in newer areas. And this is going to become a huge requirement for people to be able to have be employable. Critical thinking and problem solving are among the top skills. I'll cover some more of the other skills that the World Economic Forum has said could be the top skills for 2025. The big skill of self-management, right? Active learning, resilience, discipline. These are things that one would require irrespective of where you are. Whether you're an employee, whether you're in the army, whether you're a self-employed entrepreneur, everyone needs discipline. Even in fitness, we need discipline. We need the ability to manage ourselves, manage our time, and to take on a lot of stress. To be able to do large things means that I build the capability to handle more and more stress. 85 million jobs will be displaced because of a shift in the division of labor between humans and machines. And but the good news is 97 million jobs will emerge because of this. These are the top skills that are going to be required for the employers, I mean, to be employed in the future, to get work in the future. And these are going to be very in-demand skills, right? Whether it's analytical thinking, you're looking at active learning, you're looking at solving complex problems, critical thinking, leadership, technology, using new technology, designing technology, and having an ability to deal with difficult situations and problem solving as required is a huge, huge skill in terms of an entrepreneur, because you will constantly come up with various problems. Now, when it comes to getting funding, funding becomes such a big deal, and most businesses think funding is the way to go about starting a business. But after speaking to a couple of people and personally having had dealt with investors and worked on my own, I would suggest and I would urge you to start with bootstrapping. If you can run your business with no money or with your own money, and then if required, maybe look at friends and family and start generating revenue, start generating some traction, start seeing returns, you can possibly use that to pump into your business. If beyond that you need to scale at a much faster rate, then look at investment, then look at funding, and at that point you would be able to command a much higher value. And primarily that would require you and the venture capitalist or the investor coming to an agreement, because there is no standard or agreed way that this is what everyone follows. Now, some of the general ways that most companies do it is either looking at discounted cash flows. What could be your cash flows in the future? Discounting that based on looking at inflation, looking at how cost of money goes up, and you discount it. You look at projected revenues. Okay, you've got so much revenue, you're planning to enter some new areas after you get that funding. How is that going to increase your revenue? So you project that, and based on that, again, discounted would give you your valuation. Another method is the checklist method, where they look at, okay, you haven't started generating revenue. They look at the founders, what is their ability to resilience, their ability to deal with problems, their enthusiasm and passion for what they're doing. Do they have a MVP, which is the minimal viable product? Have you created something that has already possibly been used by a few users? Have you got any traction from those users? What is the response that those people? Have you got an alpha testing of the product done? Have you done a beta testing, or are you already in the market? Now, typically when we go looking for investors, we would lap up anyone who has money. But if we don't look at the investor profile, look at and understand what kind of companies they've invested in, what is their vision, where are they thinking of going, what is the way that they have approached things, will make a huge difference, because that can lead to a lot of problems in the future if your vision and the vision of the venture capitalist or the angel investor is not matching. Then there will be a total loss of what you were trying to do, and hence possibly having to go with what the angel investor or venture capitalist wants. Now, when it comes to getting funded, this is in the whole neo banking space. I understand neo banking and digital banking and fintech is something that you're all very interested in, and what I was asked to talk quite a bit about. Chime is one of the big neo bankers that has managed to raise a huge chunk of funding. 485 million at a $14.5 billion valuation is no joke. And the best part is they are saying that they are EBITDA profitable. EBITDA would be earnings before income tax, depreciation and appreciation, amortization. So this is huge because there are so many startups that are not profitable. You look at Amazon took 20 years to start generating profits. You look at Dunzo currently spending over 200 rupees for every rupee that they were earning at one point, and now that possibly I think they've reduced it to about 13 rupees for every rupee that they earn, right? So companies are spending. Even companies like Swiggy and Uber are not yet profitable, right? So this is huge. Now, when it comes to neo banking, what is neo banking? Neobanks are basically entirely digital cloud-based banks which are trying to enable startups and SMEs to get a simplified way of dealing with banks, right? So they will allow the banks and the startups and SMEs to not just use banks for putting their money, but to be able to use it to make their business operate that much better, right? And this is an area in India, neobanks will have to work with traditional banks because new licenses are not going to be issued. So neobanks will have a back end of a traditional bank. The good thing is it's not highly regulated, but because the banks are very highly regulated by RBI, dealing with them and striking a deal with the bank would be something that is very important. Now, you look at the whole neo and challenger bank market. It was actually worth only about $18 billion in 2018, and now is growing. And in the future, by 2027, is going to be a $1 trillion industry, right? So coming back to this, so what are the advantages for a customer and business, right? You get a chance to create your account without having to deal with multiple forms, go to the bank again and again. You're able to do international payments seamlessly at a much cheaper rate. You get a interface that can be much more user friendly, much more agile, and smart reporting. So you're able to create reports and generate data on what your usage of finance is in a much more informative manner, right? So how does this help businesses? They can make payments without having need of a manual person for those payments. They can have a platform which will give them a general idea of where things are placed and where is their money in terms of various vendor management, in terms of customer dealing with customers where payments have to come in terms of maybe refunding employees. These could be the various things that they will get visibility of, and this is something that most small businesses struggle with. Most small businesses have a huge amount of payables and receivables that they are dealing with on a daily basis. Now, this is a beautiful story of Good Money, a company in US, which is again in the whole neo banking space, where they are allowing their customers to actually have a piece of the company, right? They raised 30 million in their first funding, and now they are at every point that they have a customer come on, the customer gets a chance to even get a part of the company and a part of their profit. This was seen earlier when companies were looking at starting things which were non-profit, and this is actually now being happening in a for-profit organization, and hence not something that we would have seen before. What about in India, where, as I said, how is it progressing in India? Which are the big players in neo-banking in India? So you've got Yellow, EP5, Jupiter, Nevo, Instant Pay, Payzalo, Walrus. These are big names in terms of neo banking, and these are how they are going about it. They've got a particular segment, they've got investors, bank. So you can see that Yellow is working with ICICI, EP5 is not actually got a bank partner. Jupiter also doesn't have. Neo's got two. So this is data that actually is available online, and you could look this up. So I would end by this quote by Cara Goldin, who runs Hint, which is flavored sweetened drinks, which actually she's taken to a 200 million revenue company, right? Again, revenue being something huge rather than just looking at valuations and funding. So this lady says that I would take passion, curiosity, and commitment over experience any day of the week. So at this point in time, I would say just because you don't have experience doesn't matter, as long as you have passion, as long as you have curiosity, and you are willing to work with commitment, you can do a lot. So I'll just quickly end with a short video to show how things have changed over the years. So yeah, we are in a point of the world where things have changed so quickly that information is available at our fingertips. But the ability to learn, ability to pick up things fast and move very quickly is going to really make a lot of difference. So I feel there's a lot of potential, whether it is fintech, whether it is entrepreneurship in general. I feel we've got an amazing place to be at. So there's a question that's come up. Do you think traditional banks face a threat in terms of business due to growth of neobanks? Um, Currently, they would not face that much of a threat because the neobanks would primarily help them reach areas that were not being covered so much. A lot of people would prefer to go to a bank because even after demonetization, people have gone back to cash. But in the future, it will massively impact them. So, given a couple of years, maybe another 3-5 years, things could it will impact them. But at this point in time, maybe not so much. People do tend to resist change, so this could be something that again they will tend to resist rather than embrace. Thanks, Risha. Any other questions? Anyone else?
The floor is open for the Q&A session. I request the participants to type their questions in the chat box, or please unmute your mic and you can ask the question. Sir, I have a question for you.
Sure.
Sir, you worked from 2004 to 2008 in Infosys.
Right.
Like, then you suddenly drifted to, like, it is a complete change. You were in a very good position by then. But what motivated you? Like, weren't you afraid to move to something different?
So it was not something that was easy. It was quite, especially because most people were like, why would you do that? Why would you give it up? But personally, somewhere, maybe because of the books I'd read, maybe because of things that I'd come across along the way, I had always wanted to do something on my own. I couldn't imagine sitting in office because it used to really bug me that Monday morning I had to be in office, right? I had to be there 9 till the end of the day to log out and then be there Monday to Friday. To plan my leave, I had to inform them a few days in advance, or let's say months in advance, and then take time off. So these small things started adding up, and in my mind, I was like, if I don't take the chance now, in the future, it's only going to get harder, right? Once I get accustomed to much higher earning month, I've got married and have kids, then I have that much more to take care of, right? So then it'll become even harder for me to make that shift. Let me take the plunge now. Worst case, I can always get back and take a job because in case it didn't work out, right? In case it didn't work out, I could always get back and do a job because now I have some experience. At this point in time, I don't think that should be something that should worry anyone because now jobs are no longer that common.
Thank you, sir. Anyone with any question, please feel free to type it in the chat box, or please unmute yourself and please feel free to ask.
There's no bad question, and I need to also maybe talk to you a little bit about. I mean, while someone unmutes, feel free to cut me off and unmute and ask a question. For me, so got out and initially started corporate cricket because I saw that cricket matches and all were happening on really bad grounds. So we said, okay, let's look for better grounds. So we started looking at turf wickets and proper grounds, and we tried to put it on our website so that they can see their scores online. Then we saw that this was taking a while for money to come back, right? You spend the money initially booking the grounds, and then you're billing those corporates, and they take a while to pay you. So then we thought, okay, we need to look at something else, and that's when we always were thinking of starting a pub, and Kamlali at that point in time didn't have anything. So we figured out, actually had to get down and make a business plan, which was very hard. Opening that document, filling out what could it cost, what could it require, especially because we didn't really know which building, how big would it be. So we have to make up everything, figure out and try and think, okay, if it's this big, this is how it would be. Finally, actually, once we did manage to put the money together, which also went through a process, the actual execution was very different. But having that plan in place made it that much easier for us to feel more confident about our idea, and also to make it seem like, okay, this is going to be possible. This is actually making sense. So I would suggest sitting down and doing that business plan, as hard as it is, would make a lot of sense. And yeah, post that, got very lucky that we partnered with Extreme Sports Bar, who was running it for me. And then after the MBA, came back and got into big concerts. And I think after that was very fortunate to think that, okay, I need to start thinking of doing something that won't need so much capital. And that's the beauty of where we are today, that you could possibly start a business at home with nothing, where you are kind of just freelancing, or you're doing something part time. Even actually what these guys are doing on Swiggy, Zomato, people are doing Rapido, that is also entrepreneurship of sorts. Anyone got any particular idea or thought about neo-banking or business in general that you want to hash out? Feel free to reach out to me. My LinkedIn is Rahul Papali as my name, and you could also reach out to me on, say, Instagram, RJ Papali, Papali. And yeah, if anyone is keen to become an entrepreneur and wants some guidance, I don't mind mentoring. Of course, there would be a few caveats that if I ask you to do a small assignment or something, you have to do that and then come back. So yeah. If there are no questions, then I can
What
end.
would be your suggestions, sir, for people who want to start a startup?
So look at your life. Look at possibly your life, and see what are those things that you're facing a problem with. Like for me, in 2008, I was actually thinking of how do you do payments on a mobile? I was thinking, why do I have to, when I leave home, have to carry my wallet and a phone when I can just carry the phone? But unfortunately, at that point, when we went to RBI, they said you need to be a non-banking financial corporation, and that required 100 crores. Now, again, at that point, I shouldn't have said, oh, now this is not possible, leave it, forget it, we'll look at something else. I should have looked at other ways, because there are ways that you can tie up with NBFCs. There are ways that you can take over NBFCs that shut down. And hence, another thing I would say is not allow the initial thing or initial problems to stop you, and keep going. What role does fintech have in shaping the Indian economy, especially at a time when we are facing inflation? So, inflation is going to always be there. Inflation is something that we cannot fight. That is generally, the entire economy is designed in such a way that inflation will be there, right? So that is how money works, where we are using credit, we are taking money from the future, and we're using it now, and we are pushing things by doing that. Hence, you have all this loans and funding and all that is happening, and hence inflation happens. And this is how the capital market works, right? So where does fintech come in shaping the Indian economy? I feel fintech can be an enabler for startups, right? Allowing startups to really thrive and pushing the whole employed people working on their own, because imagine there are about 780 lakh students passing out of engineering every year, right? The kind of jobs that are there are not that many. There are a number of startups, but jobs are not going to give all these 780 lakh people jobs. So startups are going to be around, there, and people need to find a professional way of doing things in a proper way, right? So neobanking and fintech can make that simpler, can enable the challenge right now that starting a business can be quite hard, can require quite a lot of documentation and all, which these can make it simpler. How is neobanking related to common people? So, personally, I am using more digital banking than neobanking, but I feel neobanking could make things like, say, if any of you are using, say, Cred, although, let's say Paytm, right? Any of these are not exactly banks, but Paytm has obviously applied for a banking license and is working on things. But the Cred is not a bank, but Cred is now able to provide loans based on your usage, right? You have got even Paytm providing you loans based on your usage and your banking and all that. So all of this will make things simpler in terms of getting a loan, make things simpler, change the whole way of understanding if a person is eligible for a loan. Earlier, you would look at your CIBIL rating. Now, in the future, I think people are going to start looking at your social rating in terms of how are you socially, what are your the way you're dealing with people, and all of that will play a role in your credibility and loan eligibility.
Sir, as India is a gig economy, as you mentioned, like there are so many downsides of the same thing, like uncertainty. And how do you think we should be dealing with that perspective?
So, what I would suggest is really spend a lot of time to get finance knowledge, right? And look at when you do make money, split that in, partly keep some for saving, partly keep that as an investment, partly, so ideally use only, let's say, 40% of that to live on, and use the rest to as investments, use the rest as creating alternate income sources, because depending on one income source is something that can become a big hurdle, right? And that was a challenge that I also faced when I was running my event management company, that everything was on my events. And that is when I decided to start my e-commerce online business that I'm working on simultaneously alongside the e-commerce, I mean events. And that I decided to slowly shift to focus on that, because I see that as having a much more long-term future. So, to answer your question again, coming back, have knowledge of finance, do things which will keep you in the better footed for the long term. Also, look at multiple other sources that could be more sustainable. So, all of that could help. As fintech is moving towards implementing AI with many of the products and services, new technology means new digital threats. How do you save yourself from digital frauds? And do you think we need to slow down until we have stronger security systems? So, designing with enabling as much security system as what is best possible, right? And the RBI makes sure that we are one of the safest in terms of the security that the RBI requires. So putting in small things like the OTP and password, username, and those multiple checks can enable your stronger security systems. And at no point would I ever say you need to possibly slow down, but I would say think it through, look at it, and think more in terms of, okay, have I done enough in terms of what all is possible for me to do in terms of security? Have I done that? Have I used AI? See, AI, fintech, and all will be all just parts of business, right? You have AI, you have fintech, but beyond that, you have to look at customer. How do you engage with the customer? How are you building a relationship with the customer such that the customer feels that, okay, even though I'm dealing with the AI, even though I'm dealing with fintech, I still feel personalized. I still feel like this company knows me and is giving me a personal treatment, right? If you can do that, if you can actually be able to do that, that can make a huge difference. And then there are other parts, right? Your legal, your operational, your marketing, your running, all of those things also need to be handled. And so don't lose out on all of that while designing your business. Everyone talks about investments. What are your thoughts on beginning this process? Um, so to begin the process, begin now, right? You need to start as young as possible. I mean, there's a beautiful statistic that talks about that if you invest about 50,000 a year before you're 25, like for about 7 to 10 years before you're 25 or 30, and then you allow that to just sit and keep growing, compounding, that also can become a large amount of money. I think practically a million, right? With just 50,000 a year, if you save for about 10 years and just leave it with compounding, that can become a million, right? So small things consistently, and if you can do as much as possible, live as cheap as you can right now, but build in that capability that, okay, I will grow my what I'm spending only after I've grown my income. And investment, something that you will have to spend some time getting financial knowledge. Kirtan, if you want, again, reach out to me and we can talk, because there are so many options, there are so many things that you could look at, and it all depends on, I think, how one of the previous gentlemen said, all depends on your goal. What are you trying to achieve? And accordingly, and also how much are you trying to invest? That X, what are you investing, also makes a lot of difference. Hope that answers your question, Kirtan. So, if I may ask, how many of you all are thinking of a job, or how many of you all already have businesses? Anyone already has a business? Anyone thinking, okay, no, I'm going to go for a job? No? Okay. Fine. So,
Yes, sir.
Varun,
Yes, sir.
Sujata, I guess that's it. Yeah, I'll
Yes, sir.
quickly.
We've reached the end of the session, sir. Thank you so much, sir. We hope
Sure.
people solve the problems that you have shown in the beginning and really turn into billionaires in the near future.
Yeah.
This is a virtual play to thank you, sir.
Okay. Unfortunately, my name is not Raghavendra, but yeah, thanks. I
That's
appreciate.
no, sir. It's just a small issue.
That's okay. I can understand such things happen. I've been in events, so I've dealt with these things. Dealt with bigger problems. We had to. Thank you. Dealt with where Swedish House Mafia wanted to come by plane, and we had to postpone the show because the plane got damaged. So yeah, dealt with such things. You're welcome. All the best, and hoping that a lot of you become entrepreneurs, because entrepreneurs can solve the world's problems.
Thank you, sir. Thank you so much, sir. Now I would like to hand over the session to Tejasvi.
Thank you, Varun. As we head towards the end of the Entrepreneurship Conclave, I'd like to invite Raghavendra Sir, IEEE Bangalore Section SAC Advisor, to deliver the vote of thanks.
Thank you. The Entrepreneurship Conclave. So this was planned from past 1 month, and it has come true today on 27th of March. And I thank on behalf of a student coordination team to our chair, IEEE Bangalore section, Bindu Madhava, who is the backbone of all this and who is going to always support such events, as well as the period of when we are studying, and the students will have in mind what is entrepreneurship and I want to become entrepreneur. So to bring out all the experiences from such people who have traveled in that direction definitely helps them in a way so that they can take up a decision. So this was planned accordingly. And we had Mr. Murthy as well as Mr. Bharani, who had a great discussion and also a talk related to algorithmic trading and investment, which is really very, very important, and how even there was a great insight into how computation is going to happen, how in milliseconds, microseconds, nanoseconds, the decisions are taken, how machine learning and artificial intelligence play a very important role, and computation plays a very important role, and also programming languages really got a great insight. Thank behalf of the whole team to Mr. Narsimhamurthy as well as Varani for that great insight. Then we had a short quiz. It was really very interesting, and the students and the participants were very happy to participate with very good high scores and all. So it was a very great interactive quiz. Thank you for the coordinator who have done a wonderful work in this. Then we had a panel discussion on the journey of turning novel ideas into well-established realities. We had CEOs and CTOs from different companies, naming Mr. Ravi Kiran Annaswamy and Samant Prabhu and Yasha Swami Ramaswamy, Arun Tanzkali, and Raj Shri Shukla. So I thank on from the behalf of the whole team to all these people who have invested their time and also given their insights into the journey of turning novel ideas into well-established realities. Really very great questions have come up, and each one have given their perspective in terms of like entrepreneurship. Now we had Rahul Papali, so has given an insight into banking related as well as entrepreneurship in the digital revolution. Really, he has given a practical experience what he had, and also even each of us will be feeling, yes, I want to have my free time, and also earning should not be a great difficult task for me, and also I want to have a business and independence also. Really, he has given a great insight, and they have given their contact also. So you can definitely go through that and also send the questionnaire so that you can have a better insight in those directions. So further, we wanted to have one more event due to some practical problems. It is postponed. Anyhow, it was a great journey. Really, we enjoyed from afternoon 1:30 till now. So those who want to become entrepreneurs and already entrepreneurs, definitely you have a different perspective and also the great insights into this. I thank all the people who have joined and also spared their time to give away their knowledge, as well as all the participants who has participated. Also, we had a great team of the students volunteers on the student coordinate team, and each one they have split up their work into different phases and have done in executing this in a very thanks to one and all, and thanks to those who have worked in the background also. I thank on behalf of the Bangalore section SAC team and also the other team members also. We have done a wonderful work. Thank you very much. It was a great day, and also we hope to come up with different events in the coming days also. Thank you very much. It was a great event, and enjoy your weekend. Thank you one and all.
Thank you, sir. I now request Risha to present a virtual memento to Raghavendra sir.
Thank you.
Thank you, sir. Finally, we hope you all had a great experience today and learned a lot about the world of entrepreneurship. We at the IEEE Bangalore section student coordination team will be conducting various more events, and we hope to see you all participate in our future events as well. Thanks again and have a nice day.